morning, ladies and gentlemen. It's great to see our smart, beautiful, and handsome faces.
I welcome you all to this maiden edition of the annual Insurance Advocacy Conference with the theme for this year, Catalyzing Insurance Through Better Claims Experience.
Instead of insurance companies now looking more at revenue, we should focus on customer satisfaction.
It is a claim. If I cannot trust you, I cannot do business with you.
What normally causes disaffection is adherence or non-adherence by the terms and conditions of the promissory note.
Let us also, as insurance brokers, know that when a claim is not genuine, we should not try and go and start out twisting the arms of the insurance company just to make us look good before our clients.
Good morning, ladies and gentlemen. It's great to see our smart, beautiful, and handsome faces. Welcome to the 2022 Claims Advocacy Conference right here in this beautiful hall. Distinguished guests, ladies and gentlemen, I want to thank you so much for taking our time to be here. Without further ado, ladies and gentlemen, please, shall we rise? We'll take the national anthem to officially commence this event. Let us rise, ladies and gentlemen. Thank you very much. If you are like myself, still proud of Nigeria, can you jam your hands together, celebrate yourselves? Please have your seat. I am surprised that a lot of us are responding and clapping. And so that gives me my first joy this morning, that you are still, I use the word still, proud of Nigeria. Ladies and gentlemen, you're welcome to this great event. Again, I dare say that you're welcome to this beautiful event right here at a Civic Center, the 2022 edition of the Claims Advocacy Conference. I am one of the risk-taking MCs. I like to do this all over Africa, showing the brilliance and beauty of the Nigerian state amongst countries and nations in the world. I like to be called AY Nigeria, even though my name is Ayodele Ayo Akonde. And it's an honor to be doing this again in front of all of you risk takers, assurance givers, and brokers who have gathered here all over Nigeria to be a part of this year's event. I dare say that there is no nation in the world that is as blessed with both human, natural, material, and spiritual resources like Nigeria. No nation in the world is that blessed. Now, I'd like to officially indulge you, either by stretch of hands. I like the handshake to go across. I just welcome someone that is seated beside you and say, welcome, good morning, you look very good. If the hands are not going across, please stretch yours and get their hands and say, welcome, good morning, you look very good. It's very important. The theme of this year's 2022 Claims Advocacy Conference is Catalyzing Insurance Through Better Claims Experience. And this conference today will be having issues or discussing issues around catalyzing insurance through better claims experience. We'll also be addressing customer experience before, during, after claims, and also be answering questions around, is there a trust deficit in the insurance industry in Nigeria? I'm sure these are topics and issues and questions that you all are heavily interested in. Ladies and gentlemen, introducing, it was one time chairman of the Nigerian Insurers Association, NIA, a council member of the Chartered Insurance Institute of Nigeria, CIIN, and a member of many advisory committees of the institute. He is the principal consultant, Care First Consult. Please jam your hands together as he comes up for his welcome address, Mr. Goss Wiggle. Can we clap, ladies and gentlemen? Please keep clapping till he gets here.
Good morning, everyone, and thank you very much for making time out to be with us here this morning. I understand there is so much traffic all around Lagos, and maybe not as a result of the fuel scarcity, but usually. And apologies again that we are starting 30 minutes behind schedule. We had thought we would make it 10 o'clock, but it's still all right that we have you here this morning. So I will just quickly go to my address so that I will save more time. Good morning, insurance stakeholders, members of the press, ladies and gentlemen. I welcome you all to this maiden edition of the annual Insurance Advocacy Conference with the theme for this year, Catalyzing Insurance Through Better Claims Experience. I welcome most particularly the consumers present here today, without whom we will not be gathering here today. I will also like to make a special recognition of the press here, whom we have come to recognize as partners in our attempt to deepening, disseminating, and educating the public in understanding insurance with its attendant benefits and the providers meeting the expectations of the consumers. This morning, we are gathered here to discuss that perception or otherwise that which is so much or little distrust between the consumers and the insurance companies. We shall be hearing from all stakeholders, the insurance companies, the consumers of insurance products, the intermediaries, that is the brokers and the loss adjusters, and try to understand where this distrust emanated from or is just an imagination. With customer expectation and insurance companies' drive for retention, one way to which both can work is to delight customers with service delivery, and the company going extra mile to stand out from the crowd to rake in the extra clients. Care First Consult is a claims management outfit who has come to fill a void in the insurance ecosystem and to add to the value chain of insurance. We desire to be a leading provider of claims management, recovery services, arbitration, and risk management consultant in the country. We have said to improve the insurance experience of policyholders and enhance the public perception of insurance industry in Nigeria with regards to claims management. Care First Consult seeks to assist victims and their families manage the processes to minimize the emotional stress that set in and ensure compensation are timely and appropriate. Our value propositions. Our team has professionals of diverse background and expertise who have participated in research work on claims administration and management in Nigeria prior to setting up Care First Consult. The insurance industry faces huge trust deficit from the public arising from the horrifying stories that policyholders with claims shared, to the extent that those who do not have insurance policies tell the stories more and even better. Addressing the outstanding claims of individual policyholders become more challenging when policyholders complain to the regulator, National Insurance Commission, yet we have had to wait for their payments, sometimes for over 1 year. When will NICOM be coming hard on insurance who unduly delay claims or not paying at all? Is it out of place to publish the names of insurance companies who are defaulting in payment of claims, particularly after they have executed discharge vouchers upward of 3 months, to send a signal to the weak companies to wake up or pack their bags and leave the stage for the real actors to deliver services they have promised their consumers? As brokers and loss adjusters help to alleviate the pains of consumers in times of claims or added to it. One of the 5 strategic goals of NICOM is to improve trust and confidence in the insurance sector. I hope the discussions we will have today will confirm if this goal has been achieved or is work in progress or no movement at all. CareFirst Consult can be called a child of circumstance. Just after the NSAS riot, a friend approached me after his building was burnt by the rioters. He narrated how an insurance company whom he had been paying his premium half yearly declined to pay his claim even when the premium had been paid, covered the period of insurance. All the company told him was that the contract policy never indicated the premium will be paid on installmental basis but annually, and therefore he has breached the policy condition. Meanwhile, the arrangement had been going on for some years. They didn't find fault in it at all, as it was convenient for them at that time. The long and short of the story, people of goodwill intervened and the claim was settled. We have insurance companies asking for police reports for a lone accident with an estimate of repairs of 250,000 naira. Knowing that getting police reports does not come cheap, the insured victim will have no choice but to abandon the claims, knowing that paying the cost of the police report is almost at the cost of repairs of his accidented vehicle. I ask, must every claim dispute end in the court? What about arbitration clause in every policy? How much have we used in-depth analysis? Effective dispute resolutions enable parties to resolve cross-border disputes quickly and to get back to track. This is not to say insurance companies don't pay claims. In 2017, 2018, 2019, and 2020, the insurance companies paid 142.8 billion, 193.5 billion, 206 billion, and 224 billion respectively. Why are insurance companies not celebrating their claims payment to the public under the wave of people saying they don't pay claims? If you don't blow your trumpet, who will blow it for you? We are willing to help insurance companies publish their claims on our website if we are not asking for too much, as our own way of improving trust and confidence in the insurance sector. We want to offer those that engage our services peace of mind, trust, respect, humility, tolerance, perseverance, belief, consistency, and love. CareFirst Consult will ensure that the right amount of reimbursement is paid based on client's loss. Our job shall include processing and reviewing the claims made against the insurance company. We are responsible to recover denied claims. CareFirst Consult is poised to be the preferred assisted platform that will offer insurance policyholders a reasonably transparent process to achieve one of the strategic goals of NICOM, that is, to improve trust and confidence in the insurance sector and enable growth in the number of Nigerians with insurance policies by making sure all genuine claims are promptly settled. We shall be the new watchdog for policyholders against insurance companies that want to deny or delay all genuine claims. Let me on this note thank everyone, especially all the organizations who have supported this conference with their financial resources despite the late notification and end of year activities. I wish you all a pleasant time as we discuss issues that border on claims management and the consumers and their insurance companies. Thank you and God bless.
I'd like to bring up on stage right now, with over 40 years experience in risk analysis, having played in all sectors of the insurance industry value chain. This man is the former GGM, NNPC, Risk Management and Insurance. As a matter of fact, it's worthy of note that is this year's summit chair. Ladies and gentlemen, please make welcome Mr. Odunayo Bameke. Can we clap, ladies and gentlemen? He's going to be talking about catalyzing insurance through better claims experience. Can we clap, ladies and gentlemen?
So, good morning, ladies and gentlemen. Let me first of all congratulate my friend Gus Wiggle for this initiative. It's a great honor to be asked to chair the session, and I accepted without thinking, because it's always been one of the things uppermost in my heart as somebody who inherited insurance. My education was with insurance salary. So I owe a lot. Yes, I owe a lot to insurance. My father was in the insurance industry for all his life. He died an insurance man. And so for me, insurance goes beyond a business. Insurance for me is a way of life. Insurance, if people understand it the way it should be, in fact, none of us should be sitting here without having a minimum of 3 different insurance policies working for us. So I'm very passionate about it. And I always have a difference in view with some of my colleagues who sees insurance. I see risk management. I don't see insurance. I see risk management. And I see that what we should be talking more about is the service that we are selling. And the service we are selling in insurance is claims payment. If the man does not expect to suffer a loss, he's not going to buy insurance. If we go back, those of us that did insurance, what was that subject? Is it 101 or the 101? Insurance 101. Sorry, for the new generation, sorry about that. But those of us that did insurance 101 back then, what we were told was that insurance started from Lloyd's Coffee Bar. And the reason why the man who was just a coffee bar owner decided to have the group of people come together was purely to meet losses, nothing else. It wasn't about the premium. It was about having the funds to meet losses for arising from risks that were not anticipated following marine enterprise. Simple. And so we need to go back to that basics. And having said that, let me now fast forward to the current age. Okay, and the current age, I'd like to share a story. Now, I don't know if my presentation is being... Okay, now there's a story I would like to, if it can be projected, please. But I read it in a McKinsey report on insurance. Okay, and the McKinsey report was talking about the future of insurance and focusing on the future of automobile insurance. And it took the life of a person, of an executive, from the time when she bought the car, all through her driving attitude, her work lifestyle, and took everything together in terms of the underwriting, the product that is being sold. But I, just came to the end where he talks about claims for this specific event. If anyone, I requested that that link can be shared so that you read it. It's good reading. But let me just come to the aspect of claims. It says suddenly this lady who was driving, and in the course of driving, when she parked her car, all right, the AI readjusted or recalibrated the liability, because when she goes on auto drive, liability then goes to the car manufacturers and the technology owners. When she's driving herself, liability reverses to her. Okay, so you understand the dynamics. Now suddenly she is rear-ended by another vehicle. Onboard sensors, cameras, and telematics capture the collision and convey this data in real time to the insured's claim system, which is built on artificial intelligence. The system determines that although the accident was minor, the car cannot be used safely. AI immediately begins determining the best way to handle claims and researching nearby robotaxi, towing, and vehicle repair companies. All of this without the knowledge of the insured. Shortly afterward, Jane receives a call from an insurance associate who checks on her and lets her know that a robotaxi will be there within minutes. Okay, all this while, what was she doing? She was sitting down by the side and doing her work. She can leave her car and roadside assistance will take it from there. When Jane arrives home, she checks the status of her car vehicle and any repairs through a mobile app, which also gives her the status of her claims. I mean, imagine that as an experience of the average insured. Now tell me, will that person do anything without thinking about insurance? And which also brings me to the fact that we insurance underwriters or professionals needs to begin to see ourselves first as risk managers, because insurance is just an element of total risk management. And what this has done really is to look at that individual and look at the totality of whatever exposure she has, while not leaving her work undone just for the sake that she's driving. Okay, this is combining how many industries together? Automobile industry, technology industry, insurance industry, mechanic repairs industry, logistics industries, combining all together. Okay, so we need to stop seeing ourselves in isolation. And so I go to the next one. It says, and when you look at this, when you look at the article, it then talks about our claims process. It's high time we automate. We were having a short discussion and it says, it's possible to settle a claim in 24 hours. Truly, when you look at the case study in point, that claim will be settled in 24 hours. And the woman wouldn't have, even her day will not have been disrupted in any way. She will have had her claim settled in 24 hours. And the truth of the matter is that you can advertise on CNN and all that. It won't have any deep impact as this one woman when she's talking to her friends and when she's sharing experience. And then we talked about client satisfaction. The ultimate goal for any product or service is customer satisfaction. One of the things we were discussing also before we started was that all of the adverts of insurance companies, none talks to the satisfaction of customers. And so when you say you pay 147 billion in claims, so you could have paid it to, if you paid the claims to Coca-Cola or you paid it to NNPC, it doesn't affect anybody. But what about those individuals? What about breaking down that figure to bring out the ones that actually touch the lives of the people? That's something we should look at. What about how do we use claims data? What do we do? Do we even collect data? how easy it is for anybody to access our claims data. If you go to the website of NICOM, the regulator, will you see anything about claims or distribution of claims? If you go to the website of NIA, will the first thing that hits you be the claims that were settled, reports from customers, comments from the consumers? Is that what will hit you? So those are the things that we need to research. Saying that you paid X amount of claim in itself doesn't tell any story. But there should be a story, there should be a narrative that goes with that. And enough of the fact that we contribute so much to economy, nobody cares. It doesn't affect the average person. It doesn't impact their existence. And of course, the last part of it is the potential for development of new policies, the kind of add-ons that you can have on your policies. And there is no better way to discover your potential add-ons than claims. The loss adjuster should, even though I'll talk about that later, the loss adjuster should be able to have the kind of data that talks about the gaps in cover. For every claim that is rejected, that is a potential policy or a potential policy add-on. So when you actually drill down on your claims, whether it's settled or unsettled, your customer satisfaction, you are actually digging up gold mine of possible potentials policies that can actually give you the kind of income that you want. So there is a lot that you can achieve when you focus extensively on your claims. Not just looking at it as how much I paid, but what I could have paid. Why did I not pay this? Why is this customer not happy? What could I have done to make this customer happier? You find out that you actually create a lot of opportunities, and that income that you're looking for, you will get. Later on, in sharing my thoughts, I actually emphasize it that instead of insurance companies now looking more at revenue, go and bring premium, go and sell. No, we should focus on customer satisfaction. When you focus on customer satisfaction, you are guaranteed that income that you are looking for will come, even beyond your expectations. Because truly, the service you are selling is customer satisfaction, is claims. And if you focus on that, that income that you are looking for will definitely come. So these are some of my thoughts, because as we go into the sessions, we're going to have a lot of more drill down, and we're going to have a lot of more deeper comments. But these are just my thoughts in terms of why, also looking at our gathering today. What do we want to achieve? What should be our takeaways? We must be able to ask ourselves, when we come together again, maybe next year, for the second edition of the conference, we must ask ourselves, what have we done different in the period? And one of the things my thought is, when you want to use claims experience, we can use it to begin to have the average insured person, let it become a lifestyle for them. We go abroad, and it's interesting. For everything that you do, you rent a car, they sell you insurance. You enter a shop to buy an item, they sell you insurance. I mean, they sell the insurance as if it's part of the product, it's part of the service, it's an end, it's a need, it's what you must have, it's part of you. And that makes all the difference. And sometimes you are tempted to buy. I found myself paying for insurance when I rent a car. And I just asked myself, for what? But the way it is presented, the way they made me feel, is as if I am incomplete if I don't have it. Okay? And then claims is also the only test of trust and gateway to earning the confidence of consumers. We can talk about trust deficit from here to eternity, but the only way you can get trust is when the product or the service meets the expectations and satisfies the customer. That's the only way you can build trust. That's the way to build trust. I know of a case There's a one of my former colleagues that, as far as this guy is concerned, there is only one insurance company in Nigeria. I won't mention the insurance company so that my friend here will not smile too much. But do you know why? When he was a little boy, his father, way back then, bought him a bicycle, a rally bicycle. Those in my generation remember, rally bicycle, keke rally. Now, that bicycle was stolen, and the boy was devastated. And the father said, "Don't worry, I will buy you another one." And he said, "Where will you get the money to buy that?" I said, "No, I insured it." And then he calls the insurance company, and they replaced the vehicle, the bicycle. That experience stuck with this guy. It stuck with him. I mean, for years. As at the time he was sharing the story, he was in his 50s. So you can understand. So as far as he's concerned, the only insurance company is that company. Why? They made him happy. He felt good. They touched his life. And that's it. That's the story that we need. And once we have that, we can forget about every other thing. Every other thing is like domino, to fall in place. Claims processes should be customer friendly, automated or otherwise. I'll give an example. I went to the website of one of the insurance companies that claims that they will settle your claim. You don't need to see them. Just go online, lodge your claim online and all that. And I went quickly and I looked through, and one of the documents they were requesting for is receipt of the purchased item under theft. And I sat beside the person in charge of technical. So I asked him, I said, "Can I see the receipt of your TV?" He looked at me blankly. I said, "Yes, can I see the receipt of your TV?" Then he looked at me again. Then I said, "Go and look at your website." How can you have how can you be asking somebody for, how many people have receipt of their telephone or their TV here? Yeah, that's ridiculous. So when we claim to automate, let it be friendly automation. Then claims experience is our product. It is what we sell. Claim statistics should be properly analyzed, especially the rejected claims. It could just open up opportunity to expand our products and also create add-ons for us. Most importantly, again, we need to change our mindset, moving from default position of all claims are potential fraud and negative profiling of certain risk or certain clients. You know, my father worked many years as claims manager for Royal Exchange. In all the years, when you talk about Lebanese, they say they are fraudulent. When you talk about this, they say they are fraudulent. And up till today, we're still saying the same thing. When you give a loss adjuster to go and look at a claim, it's from a default position of fraud. When you talk to an insurance claims person, his default position is this claims is fraud. I mean, why? So when you have that default position, you can never satisfy the person. There is a saying that you should be able to say no to your customer, and your customer is happy that you said no to him. That's the way it should be. Okay? And then my final slides. Underwriters should aim for higher level of self-regulation. That's one of the things that I believe that we also need. Organizations that cost every activity might just discover that it is cheaper to settle claims faster than wait for regulatory intervention. You spend money defending, you still settle the claim, and you end up with a dissatisfied customer. So why not just make it a priority to settle? And then claim staff should be evaluated based on turnaround time, from notification to settlement, and not how much the department saves the company. Loss adjusters should be rated based on the time it took them to finish a case, not the fact that, oh yeah, we patronize this loss adjuster because he has rejected so many claims. It's not doing us any good. Customer satisfaction survey after every process should be incorporated. If you do Access Bank, once you finish a transaction with Access Bank, you get an email. The email notifying you of a debit transaction comes with 3 smiley faces, whether satisfied, not satisfied, and all. Simple surveys. It doesn't take you time. One click, you're done. And that helps us to really measure what exactly it is that we are doing. On that note, ladies and gentlemen, I thank you very much for allowing me to disturb you this morning with my thoughts. And I believe that as we go through the day, we will definitely have a fun time looking at our industry. I'm passionate about the insurance industry. Thank you very much.
Next speaker has a very rich profile. Distinguished guests, ladies and gentlemen. She's a lady. And I love it when women who are cerebral and smart stand up for something and speak. I'm also very blessed because she is also the chairperson of the Agricultural and Allied Group, Lagos Chamber of Commerce and Industry. Before she comes up, I'm going to mention her name and she's going to come up. She's going to be talking to us about customer experience before, during, and after claims. We're setting the stage for her. She has over 3 decades in human resource management, business consulting, and entrepreneurship. She's a certified trainer, a career, youth, and marriage counselor, a gender advocate, a volunteer mentor with UWIN, Sherry Blair Foundation, Faith Foundation, and Tony Elumelu Foundation. She also volunteers as a facilitator and training with Faith Foundation and NECA's Network of Entrepreneurial Women, NNEW. Ladies and gentlemen, bringing up on stage right now, the chairperson, Agriculture and Allied Group, Lagos Chamber of Commerce and Industry, Mrs. Edomong Akpabio. A round of applause, ladies and gentlemen. Can we clap? Please keep clapping, keep clapping. I believe the women should do more to support her. Women supporting women.
Good morning, everybody. Good to be in your midst this morning. Thank you also, Mr. Goswego, for inviting me to speak at this auspicious occasion. From the perspective of a consumer, I'll probably share my own personal experience about insurance, my insurance story, and some of my colleagues that I've had to work with them over their own insurance experience. From my understanding, an insurance claim is a formal request by the customer, the policyholder, for compensation for a loss that has been covered. So when Mr. Wigo was talking about a policyholder whose claim was denied for one reason or another, I can feel that there's something wrong with this definition. So the claim is that something has happened and I've asked to be compensated, and I'm a policyholder and a valid one for that matter. Next slide, please. Okay, so let me take us back to 1993. At my employer at the time, I resumed from maternity leave, and he asked me if I knew anything about insurance. It was a very serious meeting. He sat me down and asked me if I knew anything about insurance, and I said, apart from the third party that covers my Volkswagen Beetle, I don't know anything there. And would you be willing to learn? Of course, yes. I said I was willing to learn. And he said we had a lot of problems with our marine insurance. It was a construction company. We had a lot of problems with marine insurance, and and the insurance totally. And he wanted to just make sense of what was going on. He didn't seem to have any problem with the broker, but he had a problem with the insurance company. I didn't know how that worked out. So because I was willing to learn, he also told me he had a stake in an insurance company, and I was going to do like 6 months there to learn, so I can come back and, unravel the mystery around our insurance policies. So that was the year I went to Unitrust Insurance. I think I should feel free to mention those kind of names when it's a good one. So Unitrust Insurance was the insurance company. My MD had a stake there, and I was trained there for 6 months. And I returned, and so many things happened. So I call it my year of intentional insurance, because I was virtually paid to learn about insurance, and I had to know beyond my Volkswagen Beetle third party it was carrying. Next slide, please. Okay, so thereabouts 2001, we had Toyota Corolla, the type you call First Lady. And on one fateful night, my husband drove that car and had an accident on Alfred Rewane Road. Very terrible accident for that matter. And the car was a write-off. Because we had comprehensive cover on the car, 3 months later, the claim was paid. Very lovely story, very lovely experience. So that was the first time, I could say that I have an insurance claim experience. It was a good one, and we were able to replace by another car. My husband is here to confirm that. Yes. Next slide, please. And then I had a heartbreak. I have to tell the good story first. It's so early in the morning to start telling people bad stories, so you start with the good one. So the good ones, I was trained. I was encouraged to join the institute. Then it was Insurance Institute of Nigeria. It wasn't chartered then. But that wasn't my career path. So I just saw it as, okay, let me see how it works. I wasn't particularly interested. But I need to tell you the truth. I wasn't interested because I didn't like the way the professionals dressed. The place was looking, the office was most of the time dark. There were issues of lighting. The professionals were walking around in faded clothes. I was once blue kind of shirts. So it wasn't attractive at all. So I wanted to just train and leave. So I didn't go there. So the heartbreak, my first heartbreak was in 2005, thereabouts. An insurance company came to my office, and they told me a lot of things they could do. We could save on a monthly basis. My colleagues, I had one or two of my colleagues with me, and we could save every month, and at the end of the year, they would pay and all of that. And so some of my colleagues and I, all of us top managers at the time, we did that. And then it was 12 months later, and there were stories. First, we heard the insurance company was going under, and then we began to demand, to have our money back. And it was a very torturous journey. We had to write letters. I now knew that, NIA, NICOM, all of that, copying them before they paid. It wasn't funny, but that was my experience. Second time, further to that, work-related, is the fact that my company, on the basis of what we did here, also, bought into the insurance companies. Oh, you could do some kind of insurance for all your managers, and the company was paying. And then in 2007, one of my colleagues had left. One of my colleagues called me and said, there was something the company was paying for us. And I said, yeah, I remember. I called one of the so-called account officers. And then he told me, oh, when was it? When was the last payment? And this, I'm like, I'm no longer there, but you used to come pick up the checks. When last did you go pick up the checks? And then I heard another part of the story. Oh, was he an agent? Was he a this? Was he a that? And that was very, very sad. Up till today, that claim has not been paid. Next slide, please. These were my learning points. Next slide. I got this quote from this gentleman, and I'm glad that Mr. Bameke mentioned it. Insurance is about trust. Whether it's banking, whether it's insurance, that is what we are buying as consumers. We are buying the trust. I'm buying the trust of the bank that I will always find my money, not any other person's, but the one I gave you. I should be able to get it back when I want it. And so when some banks are going under and they keep, tossing their customers up and down, it's very painful. Very, very painful. So that's why it was painful for me that I had to virtually threaten the insurance company to have my money back. And then there were no smiling faces, at that time. So when trust is lost, there's no way you can sell. And that is why insurance is not being seen the way Mr. Bameke is explaining to us. We are looking at insurance that should be so attractive that I shouldn't even want to come here without having one. But I can tell you that those 2 or 3 that he's talking about, if you tell some of us to lift up our hands, it's only the car that brought us that has insurance. Next slide, please. There should be professionalism. At the time that this gentleman is they're telling me from the insurance, asking me from the insurance company, was he an agent? Was he? I don't know all of that. I know he represented you. You gave him your card, and that was how he was relating with us. He was picking up our checks, and then you are now asking me, and then I'm looking and saying, okay, is it all about the commission? Maybe that was what was driving him. What was driving him wasn't about me. It wasn't about what I needed. It wasn't about what I wanted. It wasn't about satisfying me. It was all about his commission. So when those agents are out there, all they are looking for is meeting a target and getting a commission. It has nothing to do with customer satisfaction. We will never get to where we are going if we do not change that. Next slide, please. Okay, so I got this from a platform that I belong. And someone posted this. It was so talking about my own experience. Said, today I randomly thought about insurance. My first insurance cover was taken due to a threat. Lagos it. You don't have insurance for your car. They stop you. They read out all the wrongdoings. Life insurance in case I died. An education cover for my child. I wasn't taught about insurance. I met an agent who had a target. That is why insurance penetration will never grow. Is it true? Is it false? It's something we need to think about. Because if all that people have in their impressions out there, that you are looking for your target, you're looking for your commission, and not about the customer, and end of the day, claim is going to be an issue, we are not going to get to where we are going. Next slide, please. I'm glad Mr. Bameke also talked about service delivery, because that was a very serious issue that we had. We know risk management is clear. It's clear about what insurance can do for us when it comes to risk management. I'm a farmer, by the way, and during COVID lockdown, a lot of my colleagues had issues. There were so many issues. Despite the fact that we were doing food, we had passes to go around, a lot of my colleagues had losses. They couldn't even access their farms because there was no transportation. So birds were dying, pigs were dying, eggs were getting bad, and all of that. And we were doing a lot of firefighting nationwide. At that time, we began to appreciate what insurance could have done. The losses were huge. But the service delivery was zero. We need to get back into service delivery. That is the key to the growth of the insurance industry. Next slide, please. So in conclusion, I would say that insurance is good. For business people, there should be, just like Mr. Bameke said, I don't expect any business person not to have 2, 3. There should be a cover for nearly everything, especially if you've ever suffered a loss. If I wasn't compensated for the car that was accidented and a complete write-off, I probably would be so on insurance. It would be so unattractive to me. But that was what drew me. It is a claim. If I cannot trust you, I cannot do business with you. I think there's a time for question and answers. Thank you very much for your attention.
Ladies and gentlemen, we're moving further. This time, we're taking a technical presentation And this one is from the industry perspective. We have heard from consumers and some of their concerns. Trust was a focal point in that conversation. But now let's also look at industry perspective. And I'm hoping that in this conversation, we can now talk about the issue of target commissions, driving people to be able to buy into the beauty of that industry. The topic is, it's in a form of a question though. Is there a trust deficit? And I like that, in the insurance industry in Nigeria. That's more like answering the issues that has been raised by Mrs. Akpabio. Our speaker is the Executive Director, Technical Services, Leadway Assurance. She holds a bachelor's and master of law from the University of South Wales, England, and the University of Bristol, England. She is a barrister at law in Nigeria, an associate member of the Chartered Insurance Institute of London and Nigeria, and an associate member of the Chartered Institute of Arbitrators in the UK. She holds an advanced management program certificate from the Harvard Business School, US, and is a certified leadership alumnus of the IMD Lausanne. Ladies and gentlemen, please join me as I welcome up on the stage Miss Adetola Adegbayi. A round of applause, ladies and gentlemen.
I'm not sure whether, again, risk management, I almost fell. So I hope there's insurance for this building. I'm actually not sure whether 10 minutes is enough to respond to, customers, because it's like trying to say, sorry, can I have the presentation up, please? And it's only one slide. It's a poster presentation, because I was warned it was going to be for a short time anyway, but cutting it by 10 minutes may not help. Again, to Mrs. Akpabio, thank you for that journey. It's a very good experience that you presented to us. And Mr. Bameke also decided to play a protagonist by also trying to attack the industry that it belongs to, but it's not a problem. He's retired, even though he's still an insurance company director. So I think between the two of them, it's always a very difficult one, as an insurer, because sometimes you find yourself not wanting to sound defensive, but at the same time, trying to appreciate and understand the client perspective, and at the same time also trying as much as possible to ensure that you comply, on the regulatory side. So insurance is basically a business that combines everything. It combines law, it combines sciences, and it combines psychology. So you have to be a lawyer, a scientist, and a psychologist to be able to understand this business of ours and to be able to balance the interest that is involved. Now, back, taking from the last story, our business is really, sometimes when people talk about insurance, I also always say that insurance is such an esoteric subject that you need to let people know that don't stop calling it insurance. Just start calling it, you're selling money. Just that the money that you're selling is money that is not available on demand like the bank, but you can call upon it when you require it for an event that is unplanned for. So first of all, the unplanned for event must happen, and when it happens, you make your demand. It's a promissory note. So that promissory note has conditions attached, obligations that the insured must comply with. And yes, some of our insureds in insurance also tend to expect that insurance will cover everything. Now, insurance cannot cover everything, because if it covers everything, the cost of the risk will be equal to the premium of the risk, and then nobody will insure. So what we tend to do is, it is a structure that says that there are certain things we cannot cover for a certain risk. But if you want it covered, as Mr. Bameke has said also, we will give you another policy again that will cover it, but you must have the willingness to be able to afford to pay for it. So it's a question of again, back to the science of economics, supply and demand. How much of this risk can we put into our books, and how much of this risk can we, and they're trying, because there are some data that I would like to share. So it looks as if a laptop is being brought for me. And I really would have liked for you to see, because it's really very important data that underscores the point. Now, when you go into the economics of it, you then begin to understand that if we have enough of a particular risk in the book, and then few people claim from that particular money that has been put together, because not all of us will also be able to claim, thank you very much, not all of us will also be able to claim at once, then we'll be able to, what's the word? Then we'll be able to understand the perspective that we cannot be there for everything. Now, our business model, has been said by the two speakers, is really about integrity. It's about what is our intention at the end of the day. This supply and demand, this how many people contribute, how many people claim from it. It's about capability, and it's about result. Now, if we don't have enough risk in the pool also, an insurance company, cannot really survive. It's not sustainable. First of all, the owners of capital have to put down the regulatory capital. That regulatory capital must bring in the number of risks, a sizable number of risks, to be able to worth that capital being put in. And then there's an element of profit also that must go back to shareholders for the business to be sustainable. If you look at an insurance company's balance sheet, and insurance is pure finance really, it's financial management. If you look at an insurance company's balance sheet, you can tell a company that is responding to customers more than a company that is not. What is your balance sheet? Essentially, the bulk of your balance sheet as an insurer is made up of insurance funds. Insurance funds are essentially premiums that we've collected over time and that we reserved over a period to be able to respond to the claims that come into the books. But many people do not see insurance companies from a balance sheet perspective. They tend to just see it from a pure insurance that always sounds strange perspective. So when an insurance company fails, for example, people don't know why that insurance company has failed, because they've not really taken insurance as part of financial planning. They've only taken it as, I'm insuring something. But when you insure something, you must ensure that the person that you're contributing that premium to, for your conditional contract of money, is going to be there to pay that claim when you really need it. So, there's a cartoon that, is not showing very well that I actually also like, because it still underscores the point as well. Insurance subject as a subject of trust, because again, you're not seeing it, but somebody says you need it, and then you want to call on it, and then find that when you call on it, it's available. It says in principle, we are happy with the trust idea, as long as it's properly monitored and regulated. So yes, you can trust, but our business requires for that trust to be regulated and monitored. And how is it regulated? Regulators recently started asking insurance companies to file in their reports of the claims that they have settled and the claims that they have outstanding. And there's a long list of claims that are outstanding. That singular action by the regulator to say, give us your list of outstanding claims, forced a lot of claims out, to be properly documented and paid. Just one single action. Now, the other action that is required as well is that there are different understanding of the utility value of insurance. Again, back to talking about utilitarian principles. That's what is on this corner that you cannot see. And I'm so sorry, but not my fault. The utilitarian value of insurance also follows a particular curve. People only think that they need insurance when they have a perception that they're going to suffer a loss. They don't think they need insurance when they have a perception that they will not suffer a loss. And in our business, when a loss is certain, we say it is not insurable because it is certain to happen. Now, it is the uncertainty that makes insurance a business. It is not certainty. So if it is certain to happen, it means, again, back to what I said earlier, your premium is equal to your loss. And not many people can then insure that. So limits of insurability, utilitarian value. How do you determine utility? Again, as well, risk management, the laptop has packed up. So you see everything that is insurance is happening today, you know? And I always joke that anytime I'm speaking, I take my points from what is happening around me. How do I quickly get a cord to power this laptop, for example, and still continue to make sense to you on what you cannot see? Now, back to it again. So when we talk about uncertainty, the business of uncertainty, the business of uncertainty is one that tests trust the most. Trust in insurance, back again to the principle of balance sheet, is pure balance sheet, management. So my asset side is my premium. My liability side are your risks that I've taken up. So we had a conversation, at some point, and I'm using an industry that is also very, just like a Greek industry, very conscious of loss. They're very risk aware, and they know what insurance can do for their business. It's aviation. So I had a conversation recently on an aviation, conference, and they wanted to talk about insurance. And everyone is always complaining insurance is expensive, insurance is expensive. Some people is like, I'm not getting claims. Some people are like, yes, I'm getting claims, but the cost of insurance is so high. I have other expenses to bear. That insurance just makes my business not to be worth it. And again, as insurers, we're always defensive. So the thing was, it wasn't thrown back. Thank you very much. It wasn't thrown back to the hall to say that, you know what, you don't need to insure. And I think that's the point most of us insurers miss. You don't need to insure. You have a choice. You can retain your own risk. The only thing is you must ask yourself, when you retain your own risk, can you afford to replace your item to bear a liability value that may, you may be asked to pay? If you can bear those risks by yourself, you don't need to insure. So then when you now put it into a business, like aviation, for example, where liabilities can be anything from $30 million to $100 million, you then have to ask the aviation business person, can you retain $30 million on your own balance sheet? Because there's corporate balance sheet, and there's also personal balance sheet. So if you take it to the personal side, if you build a house and your house is like, let's say, average 50 million naira, and anything happens to your house, 50 million naira, can you replace your house? Can you immediately get access to 50 million naira and then replace that house? If your answer is yes, you can immediately get access to 50 million naira to rebuild your house. You don't need insurance. But if your answer is no, then the cost of insurance for that 50 million naira, which is probably maybe about, let's say, for the sake of argument, I'm not saying that is the premium. Let's just say 3 million naira is your cost for 50 million. Why can't you just, for part of your financial planning, put that 3 million naira to get 50 million naira when you need it? You would then say, 3 million naira, do I trust again? So you're exchanging assets and liability. So immediately you put down that 3 million naira, you are passed on your liability for 50 million to the insurance company. The insurance company has taken your 3 million naira as assets and has taken your 50 million naira as liability. Trust. Do you trust that if anything happens, that 50 million naira would come out? There are many ways by which it may not come out. There's certain behavior that is expected of you to have kept for it to come out. Do you abide by those behavior? Or do you just say, oh, because I put 3 million naira down, anytime my house is lost, I'm going to make a claim and get the 50 million naira. These are the conversations that are difficult to have and that makes trust in insurance appear quite difficult, because sometimes those who purchase insurance still don't understand the balance in terms of financial planning. Now, I'm going to read out something from Statista, which also you cannot see. But I'll read it out. Claims ratio is the percentage of insurance claims costs that a company incurs in relation to the premiums earned in the financial year. An ideal claims ratio is considered to be between 75 to 90%. Ideal claims ratio, 75 to 90%. If the value is higher than expected, there is a potential for fraud investigation. Fraud. So there's also fraud in insurance. Regarding the claim, if it is a lower ratio, it can indicate that the product we're selling is irrelevant or difficult for customers to understand in getting their rightful claims settled. 75 to 90% is ideal claims ratio. Anything higher than 90% means that you should go and investigate. Maybe there's something funny going on. Anything lower than 75% means that maybe your product doesn't have value. So, without me saying whether it is, there's a trust deficit or not, I'm sure the audience can make up their mind. So, if you look at the claims ratio of an insurance company from the balance sheet, and the claims ratio appears to be much lower than it should be, then it means that the utility value for insurance is low. Or maybe the understanding of the product is also low. The awareness of how to make claims on the product is low. And one of the products with the least utility value perception is third-party motor insurance. A lot of people think that it is just police passes. But the utility value of motor third-party insurance is actually very high if you understand the usefulness of it. Because, first of all, it is a product that is available to even help fund our hospitals. So if somebody has an accident now and goes to a hospital and doesn't have money, by presenting a third-party motor liability certificate, the insurance company is obliged to ensure that the payment for all the treatment that is required of that person is settled. When you do that, what do? You build trust. Because the person that now knows that, just because I bought third party, I was able to respond to this person's need, for hospital treatment. I was able to respond to this person's loss of income, because sometimes some people are not able to work because they've had an accident, they're stuck in hospital. I was able to respond to this person's need for money. Then they have dependents as well. I was able to respond to the financial need of this person's dependents. Now, that utility value is part of what we would say also helps the national wealth of the country. But how many people see the utility value in motor insurance? And the data that you cannot see also shows that. And I'll talk to it. Now, the statistics from the industry, and this is purely from our regulator, National Insurance Commission. When you look at ratios in terms of business, fire insurance is the one with the highest loss ratio. And fire is at 88.31%. And this is based on the data for 2021. 88.31% is our fire loss ratio. Now, even that fire loss ratio also, when you decompose it, you will find that the loss ratio, what we call a loss ratio, which I've read to you, you will find that it is really more on the industrial side. So people who own factories, people who understand what the utility value of insurance is and take it on, make a call of it and use it very well. To the extent that insurance companies sometimes don't even make money from industrial property insurance. They seemingly lose money. Now, what makes fire even good at that 88.3% is because of other, corporate and household type, household comprehensive personal line policies. Now, if I now go lower again, the average loss ratio for the industry says that there's something wrong in terms of, our product. So our average loss ratio in the industry is 52%. Now, 52% questions the utility value of insurance overall. But when you break it, you find that the utility value for fire insurance, which is your basic industrial property insurance, is quite high. But overall, at 52%, the utility value for our entire insurance product looks as if we need to do something more about it. He was trying to tell the man that he asked third-party insurance. And the man says, no, he shouldn't worry. He doesn't have time to be processing any claim and everything. I said, but didn't not tell the person? Did the person believe you that you have genuine insurance? Because I know he had genuine insurance. He bought it from us. I said, did you tell the person that this is genuine insurance? He says, yes, but the person said no, that he doesn't want to take the chance that he just doesn't want, he doesn't want to have his claims processed. He doesn't want to go through, the wahala, as they say. Now, if customers don't go through the wahala, perhaps this is also a new industry. Maybe there are people who are retired from the insurance industry. Maybe there are companies like CareFirst. Maybe there are, companies like, Akiwumi and Co. in terms of law firms. Maybe we just need, and I've said it at the legal forum as well, there's a section on business law. Maybe we need lawyers that actually also just help people to process their claims. Because until you find people who can take the burden of processing claims off of customers who don't have the willingness to claim, the utility value of our product will continue to be questioned. And until we increase the utility value of that product, there will continue to be a question of trust. So for me, it's purely the economics of it. As you go down, motor being at 39%, general accident, which is another one that is perfect. In fact, general accident is one of those products that can be blockchained. And when I say blockchain, it can responds to the example Mr. Bameke gave. Because what is it really generally? It's personal accident, either on individual side or group personal accident. It is also a means of providing money. It helps to sustain our national wealth. The economics of it is so perfect because it's either you have an accident or not. So if you have an accident and you need hospitalization and you go to an hospital and your personal accident certificate has been changed, has been blockchained, to turn it to money, all the hospital needs to do is call upon it, verify that it exists, and once it exists, they go ahead and treat you. They file their, demand for payment, and the demand for payment comes in. But guess what? Even the utility value of personal accident or general accident insurance is still very low, at 44%. So these are products that we need to begin to get people to know so they can continue to understand the utility value of insurance. Now, when you go further again, marine and aviation, 36%. That's the loss ratio. Oil and gas tends to be quite high also, but for oil and gas sometimes there can be a long delay in adjusting the claim. But that is even quite high, reasonable for Nigeria, at about 50%. Miscellaneous is about 28%. And life insurance. And Mrs. Akpabio mentioned something about, I think it was a life savings scheme from the description. 35%. And 35% is again talking to the utility value of the product. So as an insurer, I wouldn't answer your question as to whether there's a trust deficit or not. But I think the data, can do it by itself so that I'm not quoted as this is what I said. No, I've not said anything. The data itself has spoken. And the data says that, trust deficit is a question of how do we value the utility value of the products that we sell. It's pure economics. And when we understand it, the trust will increase and our industry will be better for it. Thank you very much.
Good morning, ladies and gentlemen. My name is Kamal Raji. I'm a lawyer, and I'm representing two organizations. I'm representing my firm as a lawyer, and I'm also representing Nigerian Bar Association. MBA section of business law. My role there is a chairman of the Committee of Insurance and Pension. Now, when I got the notification of this, I thought it's something that I should attend, even though at the moment I'm also attending a fee-paying international conference, but I decided to come at least to have a good discussion with the parties that are involved in insurance business. Now, coming to the issue at stake, my experience, Ms. Tola, I know she's smiling now, knows my experience with insurance company concerning my client's claim. We had it tough, we had it personal, and at the end of the day, even though your attitude, I'm talking about your organization, was bad and unencouraging, but my role then was to tell the organization, look, you are not being good if you are hard on claim settlement. When this claim is, so we have to seek the intervention of NICOM. At the end of the day, despite the intervention of NICOM and the clear fact that your company was liable, you still resisted. And in hindsight now,
I know it's important.
It's very important because.
But I want to drive you towards your question.
Yes, I'm driving it. That's where we are here.
Thank you.
Yes. Well, we are stakeholders, so we need to get.
Yes, I am very careful with you. You are a lawmaker.
Now, the point I wanted to make is the fact that, on our side, I now understand the attitude or the perception from the delivery of the conference that what the company, our insurance company, thinks too much is about the balance sheet. If you look at the balance sheet, at whose expense is balance sheet of insurance company supposed to be balanced? If you set up a business and you think that you must balance your account based on the interest of your shareholders, then the purpose of which insurance company is set up is defeated. That's one. The second aspect has to do with the loss adjuster. The loss adjuster do not know their role. They don't think that they are independent because of the fact that the insurance company are their major patrons, and they take detection from insurance company, which is wrong, because if they are independent enough, they'll be able to boldly say something. If my complaint against the loss adjuster, based on the fact that what was written was wrong, and that aspect has to be fixed. If it's not fixed, there's going to be a big problem in the industry. Then the secret of the legal department, we made by my own association, we made a recommendation to some insurance company through NIA that look, the legal department of insurance company need to be fortified. There must be real legal department in every insurance company who will examine claim and limit the incidence of exposure to litigation. If you have a good legal department and doing their work, there will be limit to the incidence of litigation, and that should be borne in mind. The other one is that care force, which is a good concept, very nice, good idea, but I just worry in the sense that, look, insurance company is a regulated business. There must be a regulator regulating each aspect of players in this. How care force will come into play, we have to be defined based on the existing law. Secondly, if you look at, I was a member of the Tema panel that did the Insurance Consolidated Act, and we don't have any provision for this kind of organization. So we need to look at it, because your job is straddling so many professional duties which are regulated. So you need to look at it and see, okay, even though the idea is good and innovative, you must have some kind of regulation by NICOM. And this is not. Then the final analysis, I want us to look at the issue of third-party insurance claim. Because this is where we are missing the point. The big guy who does insurance, big insurance, they know the law, they know their rights, and they can understand, and they are painstaking in filing for their claim. But the ordinary folk on the street who takes third party will not have that kind of zeal to pursue it because they feel that they are getting the insurance because they want to avoid police arrest. But can you imagine a situation whereby there's an accident on Third Milan Bridge and the guy says, oh, sorry, which insurance do you have? Oh, I do 9 your network. Let's exchange, and the next day that claim is covered. The trust element will be imbibed in that aspect more than when you satisfy the big guy. And the pool of resources that will come from number of cars that are insured on third-party basis is enough to pull this society right. And then on the NIA should be more self-regulating. They need to be self-regulating because if NIA takes sanctions of their members that are defaulting in claim settlement, people, the insurance insured, will have more confidence in the industry and things will move better. Thank you very much.
Thank you very much. You have raised, you didn't particularly directly ask questions, you just raised issues and concerns. And I hope that we can get responses to that. I don't know if Ms. Adetola would like to respond to, but kindly let's just take the question. We'll take the response together. All right. Please kindly go on, sir, very quickly.
Okay. Good morning, everyone. I'm still standing on the existing protocol. My name is Eric Nwachuku from Health Insurance. I want to say, when we talk about insurance, instead of taking a long sentence, can say just peace of mind. And when does that peace of mind come? It comes when the client has a claim. But it's very important for us to establish fraudulent claims and genuine claims. Now, if you look at today, people that are making noise or saying something against insurance, there are some people that have intentional motive, an evil motive to defraud an insurance company. And it is also important to know that we are here to protect, to give that client peace of mind, and also protect the shareholders' fund, because there are a lot of stakeholders. The insured is a stakeholder. The broker, the regulators, they are also stakeholders. Even the shareholders, they are also stakeholders. Now, if we are going by the last speaker, if we are taking the ideal loss ratio to be between 75 to 90%, is it not better for us to bring down the loss ratio and find a way to reward customers, loyal customers that might not have a claim within the period of insurance? Also, making the shareholders fund being protected, and also making those that had claims during the past year, they went home smiling because they were adequately compensated. And those who did not experience any claim during the previous year will be able to benefit something from insurance, from finding a way of rewarding those people, so that at the end of the day, everybody will be smiling. Thank you.
Thank you very much. You've also raised a few issues. Let's have the response right now. Please, can we clap for those who have come out to ask questions? Thank you.
Okay, I'll start from the last speaker, because that I think is easier. Insurance underwriting has a mechanism for compensating those that do not really have claims. When you don't have claims, the mechanism gets you to pay much, much less than somebody who is recorded losses, until, of course, you also have claims, in which case then your rates or your pricing starts to go up. It also has, mechanisms, for what is called cash back. Well, cash back in Nigeria has to be dealt with in a very careful way, because we also have within insurance law there's a law against inducement. So we cannot induce in insurance for people to insure, but we also have to find a way to compensate those who have low claims or no claims. So there are structures to deal with that. So please be assured that insurance does give back to those who have low claims or no claims. Now, to the more sentimental or emotional one, I have to say that, again, as I went on stage, I said it's always difficult for an insurer to stand up, because it's either you're trying to defend yourself or you're trying to find a way to balance the interests. Now, one of the things I also said is that insurance is not a blanket cover for any type of risk. It has its terms and conditions that must be adhered to, and it has behavioral aspects also that, we tend to call, the risk management conditions about how the person must behave as well. Because if you're not careful with insurance business, if you just say because you have insurance, insurance covers all your losses, regardless of how those losses occur, then there will always be a bit of challenge at the point of claim. And some of these things are the things that cause disaffection. We cannot, as insurers, avoid disaffection. My senior colleague said, don't answer. I said, no, I have to answer, because there must just be a very balanced way of answering. And the balanced way of answering is that what normally causes disaffection is adherence or non-adherence by the terms and conditions of the promissory note. Now, we have the regulator. Again, as mentioned, I said trust has to be regulated and monitored. Now, the regulator is part of that monitoring. When your regulator says you should do certain things, you also have a right to tell your regulator why doing certain things may not be okay. And the regulator is your final independent arbiter. In fact, your controller, they can even tell you to do something, even though it should not be done. Your regulator can order you to do it for the interest of the public. So there's also public interest to take into consideration in our business. Our industry settles a lot of what we call ex gratia. Ex gratia payments are payments that we make because we need to sustain the reputation of the industry. So it comes to a point where those extra ex gratia payments, out of the ratios that I'm talking about, particularly even for property or for certain high-risk businesses like agri, ex gratia payments tend to be quite high. And I know a number of insurers here would have, experienced, would have a particular volume of ex gratia payments. I need to also speak of one thing that is very important, the role of adjusters. I know it may sound as if adjusters work for insurers. Adjusters do not work for insurers. Adjusters work to ensure that, first of all, the risk event that you say has happened has happened. Second of all, that the documents that you have tendered in support of the loss that has happened are indeed verifiable documents. That the costs that you say you have suffered are indeed costs that when you go to other places to price the cost of your loss will be found to be so. So to break it down, essentially, they are document verifier as well as loss verifiers. That's all they are. They do not go out, even though, yes, my colleague in the industry also pointed to that they behave as if they're working, to just avoid claims. No, I don't think so. And I know so. Because again, that's why I gave you the example of fire, where fire is about 88% loss ratio. And I gave you the one of motor, that is also very low. Motor does not require adjuster. There's no adjuster involved in motor. Motor uses assessors. And who are assessors? If you have your own damage, they go to the garage, they negotiate with your garage agrees with them, the insurance company pays. What we find that is a challenge, which is where I'm also calling for, either care force, claims consulting companies, or even lawyers, is on third party. There's need to increase the level of utility of third-party insurance. The utility level is so low that we do need lawyers, as passionate as the gentleman that spoke and looked me straight in the eye and said he wanted to kill my joy, by talking to me directly about something personal. Yes, we need people like him. Let people like him come up and take on matters to ensure that insurance companies, respond to these claims. Let people not be afraid to make their claims. Third party liability claims, very important. They help build our country. And I hope, without being emotional about it, I've been able to answer the gentleman satisfactorily. Thank you very much.
Thank you very much, ma'am. So right now we'll have the first panel session today, and I dare say it's the only panel session today. I must say that we've sent an invitation to NICOM to have their representative on board on that panel session discussing the role of the regulator in claim settlement and protection of policyholders, but we are yet to have the speaker join us. Hopefully in the course of that panel, hopefully they come in and then they can join. But this panel session is going to be centered, distinguished guests, ladies and gentlemen, on rebuilding trust in the insurance industry. And I want to welcome up on stage right now to gracefully sit this great individual who has worked as company secretary, legal advisor to 2 insurance companies before co-founding Crystal Trust Insurance Brokers Limited 26 years ago as its pioneer managing director and CEO, a position she occupies till date. She has given more than 30 pro bono lectures on diverse topics on the platforms of insurance. Can I get your attention, distinguished guests, ladies and gentlemen? She has given more than 30 pro bono lectures on diverse topics on the platforms of Insurance Industry Consultative Council, IICC, Chartered Insurance Institute of Nigeria, CIIN, Nigerian Council of Registered Insurance Brokers, NCRIB, College of Insurance and Financial Management, CIFM, and outside the insurance industry. She is currently the Vice President of the NCRIB and was the Honorary Treasurer. She's also a partner at the law firm of Ezaibe and Ezaibe Legal Practitioners and Consultants. She is the Managing Director and CEO, Crystal Trust Insurance Brokers. Ladies and gentlemen, please, I know your hand might be busy, but let's celebrate as she comes up on stage, Mrs. Ezaibe Ekeoma. Can we clap, ladies and gentlemen? Introducing the NICOM representative, the Deputy Director. Please, let's jam our hands together for Mr. Kenneth Ego. Can we clap, ladies and gentlemen?
An insurance broker is akin to an advocate, of the client. He advocates that the client will have adequate representation in the placement of his or her own insurance needs, and also that they get the value for which they have paid a premium to procure insurance cover. And mind you, while I was talking, I stressed on fully documenting and recovery of genuine claims, meaning that as a matter of fact, there are some claims that may not be genuine. And therefore, it is the responsibility of that insurance broker to make sure that he or she explains properly to the clients, when a genuine loss has occurred, when it has not occurred, and the reasons why such claims would not be entertained, or why the insurance company may repudiate liability. Because from my practice, I can say that most of the misunderstanding, of the insurance industry has suffered over the years. They usually would stem from claims, and they usually would stem from clients not knowing that they have a responsibility when it comes to claims settlement, not knowing that claims have got to be substantiated, not knowing that, not reading the policy documents, and therefore it is the job of the insurance broker to explain to them the policy terms and conditions so that they do not have false expectations when claims occur, or so that it will be clear in their minds what they are paying premiums for. And it is interesting also to note that during my years of practice as an insurance broker, I've come to know that most insurance consumers do not know that it will not cost them any money to retain an insurance broker, because we derive our payment from the insurance companies. But of course, I hasten to add that the choice is really yours, whether you want to retain a broker or whether you want to go directly to the insurance company. Whatever will be, will be. And I trust that the industry will serve you very well, whether you have that broker or you don't have that broker. And in stating that, can you please flip to the next page? Thank you. In stating that, I have identified about 8 talking points this morning. The first one is superlative communication. And as an insurance broker, my experience has been that when you have superlative communication with your client, the relationship is bound to be one that the insurance consumer will really appreciate. But when you fail to communicate each step of the way, and then there are gaps, that is when the doubts are sown, and that is when the mistrusts, they start rearing their ugly heads. But when you carry them along each step of the way, you earn their trust. And when you have earned their trust, they believe in you. They believe that that which they have put into your hands will be adequately looked after. They believe in you when you tell them that this claim isn't covered, and you politely explain to them why it is not covered. And therefore, they understand it from beginning. And then sometimes also, they may decide that they are, say for instance, when you have a motor policy, for instance, let me use it as an example, and your excess isn't covered, and you haven't explained to them what excess is. You haven't explained to them the reason for the excess. And then when a claim occurs, and then at the end of the day, when you deduct excess, they become angry that they have not gotten full value of their claim. So these are some of the responsibilities, that I noticed that over the years, when a broker who understands the same thing that the insurance companies understand explains to their clients, he makes the relationship seamless. And any insurance company worth their salt would actually enjoy a relationship where there is a broker, because it makes their job very easy. Where there is a good broker, where there is a professional registered insurance broker, it makes the job of the insurance company very easy, because they are assured that the broker would have explained to their clients, what to expect and what not to expect. And then as human beings, when we have our services personalized, it makes the heart to be happy. It makes you feel special. It makes you trust. Have you ever looked at what customer relationship management does? Like when you use a digital platform, and I'm sure most of you have noticed, you keep going to a particular site, or you send message once to a particular site. The next thing is that site starts sending you things from their site, things that they think would interest you by virtue of the different searches you may have made over time. And not just that it does send you those things, it personalizes the messages that it sends to you. And I now see emails coming in, and when I open them, it says, hi, we have so and so product. And the first time you noticed that happened to you, I'm sure there was that happy feeling you got, that special feeling, even as you wondered, how did they know my name? And you forget that it is because of what you have activated by going into those sites that they have now known you, studied their behavioral pattern, and are now following you and then giving you information that they think will be of interest to you. That is what personalized service does. It makes one feel special. And therefore, this also would help in creating trust or rebuilding it, which I'm finding so difficult to use, but which I will come back to at the end of my session. Because when you say rebuilding, it means that trust is eroded, and therefore what we are trying to do now is how to rebuild the trust. And digitizing claims management process. In these days of computerization of businesses, especially since the advent of COVID-19, which has hastened the processes of doing things virtually, we also note that if you have a good app, a good claims app, where you can file your claims online, where you can track your claims and know where it is, where the process is, know the things that are required of you the documents required of you, what you have filed, what you have not filed, and you can follow it right to the end. You know, it helps build trust, and it also makes it very fast. And then I must also say to us practitioners, one of the things also that engenders trust is when we have less technicalities when we are dealing with our clients. You know, as an insurance broker, ours is always to speak to the clients in an elementary language as much as possible so that they can understand, because erroneously we've been branded as people that do businesses with small prints, you know, so that we hide the reasons that will make us not to settle genuine claims. We hide them under small prints. But a broker who is what is or her salt has that responsibility to bring out, first of all, those small prints to your attention, even when a claim has not occurred at all. In fact, at the inception of that policy, so that the client will know. So when we use less technicalities, it is very helpful. There are certain jurisdictions outside of here that the policies that we have that take several pages, they just have one page of a policy document. And I studied it to know whether there are things that are crucial they have omitted. And I saw it had everything, or it seemed to have everything that was necessary as a policy document. And yet it was just one page in very simple language that could easily be understood by a less technical mind or someone who is not an insurance person, because our consumers are drawn from diverse places, not just necessarily insurance people. They are more non-insurance people than they are. And so we must really watch that. And then again, part of gaining trust, like I still say, I don't want to say rebuilding trust. Part of gaining trust is by giving back to the very people that have given you their businesses, that have placed their insurance businesses under your care, by coming and giving back through corporate social responsibilities to places that concern them. That is part of trust, because you have shown them that indeed you are part and parcel of what they do. You are part of their community. You are part of, wherever they may find their places of endeavor. And so corporate social responsibility is a very great tool in trust building. And this is why you see in the annual reports of most insurance companies and insurance brokers as well, you see what they have done as CSR, placed under there for everyone to see. And I tell you, there are so many consumers who would first of all, when they get your financials, they first of all go there to even know how much you have identified with giving back, how much you have identified with their cause and with them in giving back, before they then start looking at the figures. The figures that they're actually going to look at first and foremost is not even how much you have made in terms of premium income, but how much you have paid out in terms of claims payment. And one of the very greatest thing I have come to know that is very essential in our businesses is rebuilding trust between insurance brokers and underwriters. The reason I have now used rebuilding trust, that I didn't fail to feel bad about using rebuilding trust there, is that we must first and foremost see ourselves as having the same goal. I mean insurance brokers and insurance companies as having the same goal, that goal being excellent service to the policy holder, the giving of excellent service to the policy holder. Because when a policy holder gets that excellent service, it will then become a good testimonial, not just for the insurance broker, but for the insurance company as well, and then the insurance industry in general. And therefore, the insurance brokers and the underwriters must hold hands with a great sense of responsibility to make sure that they do things that would engender trust, that would engender appreciation from those that we serve, being the policy holders, most especially during times of losses than when policies are being placed. I remember very well when we have a different insurance industry forum, our commissioner for insurance will say to us, as practitioners, we should see more reasons to pay out claims than doing otherwise. And I would assume that the gentleman that came out some minutes ago to talk about his own experience, I would assume that that was what NICOM was trying to do, the National Insurance Commission, by saying pay. But I was also happy when the underwriter said, no, I will not pay, because it takes extra guts for an underwriter to say to the regulator, I will not pay. It speaks volumes. If I am a consumer, I would rather go to that underwriter, because it then means that that sort of underwriter will not have any reason not to pay me when I have a genuine claim. It means that underwriter is very sure of his or her onions to say I will not pay. It means it is defensible. You know, their decision not to is defensible. And so when we say let us join hands, brokers and underwriters, it is not joining hands to become Father Christmas, because we are also in the businesses of making our shareholders happy. But in doing that, we must do it with all sense of responsibility, you know, especially towards the client, to make sure that we hold their hands from the beginning of placement of the insurance policy right through to the time of payment of genuine claims. And then sometimes when claims are not genuine, let us also hold hands and look at the history of that policy holder to know whether they have been responsible on their part in mitigation of risks. And also remember that we mustn't fail when a plea for ex gratia is made, for us to then come through with it, so that that policyholder will understand, yes, indeed, we have an empathy feeling over the loss that has occurred to you, although it is not, the peril is not covered by virtue of so. The insurance broker has applied for ex gratia payment on your behalf to the insurance company because of so. But let us remember that even at that, the insurance company has a right to say yes or no to ex gratia payment. It is not automatic. But as practitioners of insurance, let us find more reason when there is no genuine claim. I will amend what the commissioner said a bit. Let us find more reason when there is no genuine claim. When I say no genuine claim, doesn't mean it's fraudulent. When I say no genuine claim, could mean that the peril that is insured was not the proximate cause of whatever loss that was suffered. But let us find more reason to pay ex gratia on a claim that is not genuine when we have weighed it and it has been asked for, and we have weighed it, and we see, yes, indeed, this is a responsible client. It will make the client feel happy. It will make the client feel very happy. By word of mouth also, he could also spread that gospel to other consumers so that they will know. And let it be done in a manner that he will appreciate the fact that insurance company repudiated liability for a good reason. And this is the job of the insurance broker, to make them understand that this is really so. And so, my dear consumers, let us open our minds. The insurance industry, unfortunately, has suffered from so much misconception. And I also agree that we should have been doing a whole lot more, to publicize the good things that we have done. The chairman, Mr. Bameke, when he stood up here, said that when he goes to the website of NIA, he starts searching, for the figures for the claims payments that were made over the various years. Whereas those things should have been like posters for people to see. And so, what are we, the practitioners in the insurance industry, what are we, brokers, underwriters alike, what are we going to do to ensure that we publicize the claims that we have settled, rather than stand here and talk about the things that we should be doing, or whether claims have been settled or not settled? What are we doing in publicizing them, in letting the consumers know that these are the things, the claims that we have settled? Those are the kind of advertisements that will help us in the industry. Those are the kind of things that, when we make them to become visible and knowledgeable to the public at large, they will speak positively of the image of the Nigerian insurance industry. And the good thing we must remember, our dear consumers, is this. Remember, insurance practice is a heavily regulated one. And therefore, it should give you confidence that whoever you are dealing with in the industry is regulated. And no one who has committed funds, shareholders' funds, in finding a business would want the regulator to yank off their licenses. And it is for the reason of you, our dear consumers, that the NCRIB, Nigerian Council of Registered Insurance Brokers, the umbrella body that registers all professional insurance brokers in Nigeria, that is the reason they have provided copiously in their rules about the disciplinary measures, that they met out to an erring broker. And if you go to our website, I think it is very obvious there when you go to www.ncrib.net. We have our investigation committee. We have a disciplinary tribunal. And therefore, when you feel an insurance broker is not representing you well, you have the right to report to the Executive Secretary of NCRIB. You have the right to write to NCRIB and report, so that investigations can be started immediately. That is one of the concepts of consumer protection. But apart from that, more importantly, NICOM also has their complaints bureau, which, the gentleman here will be speaking to, I'm sure, since we are speaking to consumers on claims this morning. So, and NIA, they have their own to Nigeria Insurance Association. So it is heavily regulated, and I don't think that there's any practitioner worth his or her salt that would want to jeopardize the operational license issued to them by NICOM. And I have been asked to also speak on loss adjusters. I am not an adjuster, but anybody can, in the insurance industry, can speak to the issue of loss adjusters. And the talking point I chose there was, whose agent is the loss adjuster? Whose agent? whose agents are loss adjusters. And I put it that way for a reason, because oftentimes our clients think that loss adjusters are agents of insurance companies. No, they are not. They are not at all. Even though they are employed by insurance companies to adjust losses, but they are not their agents, because they are independent professionals. Even though it's the insurance companies that employ them and also pays them. But the reason that they do that is for the benefit of the client, the policy holders. And therefore, as loss adjusters, I wish some loss adjusters were here so that they can also hear from a broker about what aches our clients. Practices like when a loss adjuster's report is ready and they then send a copy to the broker or the policy holder, it doesn't make for confidence. It makes the client to unnecessarily think that there is something shrouded in secrecy about that work that has been done for by the loss adjuster. So the loss adjuster will just most often send it to the insurance company without more. But such practices are unhelpful. But I have also grown in my professional career to know that when those copies are not given to me, we write and ask for it. There's no genuine insurer, I think, that would not release it immediately. Otherwise, it will become bad advertisement of that insurance company, because the next question is, what are you hiding? And so, let us please take note of that. But adjusters are important when there are huge losses. As a matter of fact, and as a matter of expediency, they have to be used and they have to be employed when there are huge losses. But when the losses are not huge, they are usually done away with. Thank you very much. And so, I'm so sorry, please. I have to drink some water.
Please take your time. Please take your time. All right. Please take your time. And hopefully, we hope that we can quickly wrap that up so that we can take the comment from the NICOM rep too. Thank you very much.
Can I go to the next slide, please? And so I'm ending this with saying, what is trust? Let us remember that trust is that firm belief that we rely on something, that thing is as it is, or as it has been said to do. Let us as practitioners remember that is the watchword that the policy holders are looking at. That whatever we have said it is actually what it is. And the moment the consumer starts seeing things that deviate from that, it becomes very difficult for us to convince them otherwise. And so let that guide us in everything that we do in our practice. It will be helpful. It will become good advertisements of ourselves. Let us also know that in building that trust, it does not stop us from speaking the truth to our clients so that we do not give them false expectations. Let us also, as insurance brokers, know that when a claim is not genuine, we should not try and go and start out twisting the arms of the insurance company just to make us look good before our clients. Because at the end of the day, the insurance company will say no because they know they are right. And at the end of the day, we will be the people looking bad before our clients because we have given them false expectation that we can deliver over something that we know is not deliverable. So let us always let them know where the truth lies at each point in time so that they can trust us at every step of the way, that when the peril is covered, we'll also be there for them. And in ending, I have two quotes here. we must always remember that process improvement is the goal. Process improvement. Yes, we may not be 100% today, but there is room for improvement, and we keep improving by the day. Days are gone when you have fly-by-night practitioners and insurance companies who will not be accountable. NICOM has made regulation more stringent, and we all need them because they are the people that validate the things that we do. If we do not have the regulator, breathing down on us, then it then means that we have lost that crucial validity of the delivery of our businesses. But the regulator must also know that in making good delivery to our clients, there must also be an enabling environment for us to operate without hindrance. And love is not really a mystery. It is a process, like anything also. A process that requires trust, effort, focus, and commitment by two willing partners is a quote I'll leave you with. And who are the two willing partners? The two willing partners being the consumer, the public on one hand, and then insurance practitioners or professionals on the other hand. Thank you very much.
Thank you very much, Mrs. Ezeibe. I do not mind if you take the center stage, the middle chair. I was going to get that for you. So we'll move very quickly, and I'll hand you your microphone back just in case we have questions. It's off now. We'll move very fast now to the NICOM representative who is here, Mr. Kenneth. It's just a few of your short time, maybe about 5 minutes. We will, of course, elicit more questions. Your position on the role of the regulators in claims settlement and protection of policy holders. You have the floor, sir.
Okay. Let me adopt the already established protocols. Let me also expatiate the role of National Insurance Commission as a whole. In general, one is regulation, number two is supervision, and the third one is anchored on market conduct. The regulation is based on the Act, guidelines, and circulars. Then the supervision is when we go out with our examiners to inspect actually whether what is in the Act or what is in the guideline is being complied with by the operators. Now, what is the role of National Insurance Commission in making sure that claims are paid? Number one is that they have to ensure that the industry is sound, is safe, and stable. How do they make it sound, safe, and stable? Now, by making sure that the insurers are adequately capitalized. One, based on regulatory capital, there is a minimum for each class of insurance. Making sure, now that we have transited to risk-based supervision, making sure that the risk-based capital is established, and that the companies are solvent at all times. Is when the capital, a company is adequately capitalized, that is when they will be able to pay claims on time and carry out other operational activities efficiently. Number two is to make sure that you have a stable, sound, and safe insurance market. How do they do this? They make sure that the policyholders are adequately protected. How do they go about this? When an insurer is distressed or unable to settle claims, Section 70 of the Insurance Act 2003 empowers NICOM to go into the statutory deposit of the company to dip their hands there and settle such claims. There is 1% insurance levy paid by insurers, insurance brokers. So one aspect of it, 20% of it, is set aside. Is set aside for the settlement of claims incurred by distress or financially unstable companies. National Insurance Commission also has a way of educating consumers and operators too. They have what is called education fund. 30% of the 1% insurance levy is set apart for that. So by so doing, the consumer will know his position, the operator will know his position, and claims will be settled amicably when it occurs.
Okay. Thank you for painstakingly explaining the activities. You want to share more, sir?
Yeah, I want to say more.
All right.
I want to say more about the settlement of claims by
I was going to
insurers.
ask you that.
Yes. So, National Insurance Commission believes that any insurer that is not able to pay claims should not be in business, because this is the core of insurance business. So, according to our commissioner, our former commissioner for law, he says that one genuine claim you settle will bring 20 more businesses for you. So, how does NICOM intervene in claim settlement? As it has been stated by my former speaker, the last speaker, he said NICOM has complaints bureau. NICOM has complaints bureau that are handled by qualified and skillful staff. Among them are barristers. We have insurers, qualified insurers. We have among them qualified accountants that cannot err ordinarily in their judgment. We also have a way of placing insurers that are not performing well as to the settlement of claims on regulatory order. In that period, NICOM will set their own management to take over until the situation improves. We also have a mechanism that will liquidate an ailing insurer. Like in May this year, 2 insurers were liquidated. So for inability to settle claims promptly. You see, our act ties our hands from so many things, like Section 70 says gives a leverage of 90 days for a company to settle claims with discharged vouchers. So we cannot act outside the law. So we are asking for a review of such sections because it is weak. So another area is that NICOM has collaborate with insurers consumers association. We collaborate with them for them to give us information on insurance market, how they feel about it. They also encourage all the associations related to insurance practice, the NCRIB, the ALAN, the ARIAN, the adjusters, to have self-regulatory system among themselves to regulate their members. And the one thing I want to point out is that some of the consumers sleep over their rights. As the first speaker has said, that some of them like to settle, they don't want to. Some of them believe that insurance cannot settle claims, so they try to do it on themselves. So NICOM has open doors, and some of them, instead of coming to NICOM or the associations to ask for redress in claims settlement, they go to court. At times, I'll be on my desk, somebody will tell me that, I have this company refused to settle my claims. I have taken the case to court. I say, okay, let the court decide first. We have no business again until the court decides. But whatever decision our complaint bureau takes is binding even to the operator, or the court recognizes it. Anything that is decided by a complaint bureau, if you want to go further, you go to Court of Appeal. Yes.
Thank you very much. Please, a round of applause for Mr. Kenneth. When trust building or rebuilding trust, the process totally collapses, what is expected of the insurance company? When there is no way forward, NICOM has written letters and they're saying, and then the insurance company is still claiming, no, we cannot pay claims. You know, it looks like everybody will have to go their separate ways. You know, what is expected of the insurance company?
Thank you very much. Let me comment on your question before I actually answer it. You said when trust has collapsed and NICOM has intervened and the insurance company refuses to pay the claims, you know, that everyone seems to be going their separate ways, that what will be my advice? I'd like to state that there is no insurance company that has a genuine claim to settle and is telling NICOM, I will not settle it. No. I want to confidently say that as a practitioner, that such issue will not even arise, because that insurance company would be playing with their license. And I'm sure at that point, NICOM, who also has as the commissioner, and all the people that work with him are also insurance practitioners. So they know what we know. They know what the insurance company knows. That will be the time to use that insurance company as a scapegoat and withdraw their operating license. He has just told us how some operating licenses of some insurance companies were withdrawn because they were not settling claims. So there is no time that an insurance company would say no to NICOM over the settlement of a genuine claim.
All right.
That would be my answer.
Thank you. Thank you very much. A round of applause, ladies and gentlemen. Do we have any question before I move to Mr. Kenneth and we'll be wrapping that up? Any question at all? I will not agree that we will not have questions. It's impossible. Please, quickly. It's impossible. I mean, I will not. Our speakers have done brilliantly well, so we should have responses. Okay. So if you are penning your question, please, you could just kindly write your question, your name, and then who you'd expect would respond to that question. Kindly, just going forward. So I'll take this one. Okay, so this is to NICOM, sir. Very good. Now, in a situation, an insurance or an insured has refused to document a reported claim, for instance, motor claim. How long does it take for an insurance company to delete such claim from our books, that is, from our outstanding claims record? That's to you, Mr. Kenneth. Should I come again? All right. Now, so the question is, in a situation an insured has refused to document a reported claim, for instance, motor claim, how long does it take for an insurance company to delete such claim from our books, that is, from our outstanding claims records? How long would it take the insurance company to delete that undocumented claim, for instance, a motor claim, from our records?
Anyway, we have.
Please, let's pay attention.
We have durations for keeping records. There are some records that are allowed for 5 years, 7 years. Claims can remain for 7 years before you can discard it.
Claims can remain for 7 years. What about a motor claim, for instance?
A motor claim?
Yes.
Claim is claim.
Claim is claim.
Yes.
So it can stay within the record for at least. But what if, I think the question should be, unreported.
The issue
yes.
is that it has to be first reported.
Aha.
Documented.
Yes. So if it is not, this claim is not documented, but it's reported, according to the question, in a situation where an insured has refused to document a reported claim, right? So how long then? So this issue is a reported, but it's not documented.
You see, I don't find any situation where a claim would be reported
and not documented.
Documented.
Okay.
I've not seen a situation like that.
Okay, okay.
Unless whereby the claimant fails to produce required documents.
Okay.
Yes.
Okay, so now it's clear. All right. Thank you very much. Please, can we give a hand to Mr. Kenneth for that? Any other question, please? Please quickly send your questions. We are trying to save time. We all know this is Lagos, so we don't want to be held up in that long traffic. Now, this is also to NICOM. It looks like a lot of people are sending questions across to you. Now, delay in releasing agency license. That's the way the person put it. Say delay in releasing agency license. So you might want to give your thought on that. Then the second one is, can agency license be allowed to run for 3 years instead of 1 year? So 2 questions. The first one is delay in releasing agency license. What's your thought on that? What's your position on that?
NICOM has streamlined the issuing of agency license. It has been digitalized. Once you meet the requirements online, your license will be generated immediately.
Please, can we pay attention? Can we have some quiet within the hall? Thank you.
So what I'm saying is that NICOM has transited from manual to digital issuing of agency license, or if all classes of licenses. So once you complete your your documentation online correctly. Yes.
So, cause that by, are you saying that could also lead to a delay?
Yes.
Okay.
Yes. So once you fill it correctly, your license will be generated instantly.
Instantly, you mean
There's no delay.
if all details are put in on the website, NICOM,
Yes.
24 hours, within 24 hours you get your
You
license.
get your license.
All right, that's good. That's good. I thought we would clap. Oh, we have a lot of people disagreeing, right? Okay, so you might have to send that claim personally, and we'll take it up with Mr. Kenneth. But wait, there's another question though. Can agency license also be allowed to run for 3 years instead of 1 year?
No.
Okay, it is still
Unless it is now going to be enshrined in our policy.
okay.
Yeah, but now, no.
Now, no. So it's a totally policy matter.
Yes.
A policy matter. All right. And are you attempting? Is there a way to review this policy? Because you mentioned something about policy review too.
You see,
when you were speaking.
every policy can be reviewed. It is people that operate policies.
Yes. Are you
When they
making
look at
attempt? Is NICOM?
When they look at situations and circumstances, they may decide to review or not to review.
Is NICOM going to review that policy?
As a person here, I'm not competent to comment on it.
Until you reach out to your Oga at the top. All right. It seems you have a barrage of questions. I am sure that you're going to take them all. Now, so I'm going to relax from being direct. Now, my question to NICOM is, yeah, NICOM has a lot of, but please feel free. Does the pool of fund with NICOM cover uninsured cases? For instance, hit and run cases. The pool of fund that you have at NICOM, does it cover uninsured cases, Mr. Kenneth?
We have that. Yes.
It does.
Yes.
Yes, it does.
Yes.
For, especially for these hit and run
Yes.
cases.
Yes.
Yes, it does. Thank you. Then the second question is, how many of such cases has NICOM paid, or how many of such claims has NICOM paid in the past 2 years? What is the accountability of NICOM for the funds in their possession?
I didn't know this question would come, so I don't have.
I know that you didn't know these questions will come. You would have brought
I don't have available statistics.
data. Okay.
Yes.
But can you give us, as a representative of NICOM, what you guys have done as a body so far on uncovering these claims?
You see, like I said during my presentation, people sleep over their rights. They don't. Not so many people like reporting their cases because they feel it will not be possible.
All right, thank you for that. We'll take a break from you, sir, and come to Mrs. Izaibe. Now, Ma, responding to this question, how do we deal with increasing insurance fraud in the industry? Ma, insurance fraud.
No, I haven't understood your question. Is it how do we deal with increasing it?
No. How do we deal with the issue of increasing insurance fraud?
Oh, okay.
Yes, in
So
the industry.
Which means insurance fraud is
Increasing.
increase
Yes, how
in
do we
the
deal with
industry.
it?
And insurance fraud by who? Is it by the policyholders?
Well, it's just a question here. So,
Yes,
except
because-
if we can have a An update.
I need to
Okay.
understand that. And let me assume that is insurance fraud by the policyholders, because that's what can come up to me immediately, and it will be a shame, if that should happen at all, not to talk of it being on the increase, because how to deal with it is by repudiating it immediately, because when through investigation that the claim does not look genuine at all, and you can back it up with reasons why it is not genuine, the very good thing to do, both for the insurance industry and for the policyholders, is to repudiate it. When you do that, it means you have stopped the encouragement of further filing of fraudulent cases, and so that people will know that insurance operators are very vigilant, and that we have processes how we can determine whether a claim is fraudulent or not. And then also, it is also good if when we find that a fraudulent claim has been filed, it will be good also to advertise it as much as possible, even as we try to not name and shame, so that people widely will know that such things can be found out, and such things will not be tolerated in the industry, in as much as the insurance industry is in business to settle claims. We also want to make sure that the people that are settled are those who actually should be settled genuinely.
All right. Thank you very much for your response. And this is going to be the final response. So quickly, I know, sir, a couple of questions and then we wrap up, okay? Before I let you off the hook, sir, this is to Mrs. Ezeibe. I just want to get your thoughts finally on this. What is the state of limitation towards claim reporting? Did I get this? What's the statistics, right? Oh, statutory. Oh, okay. What is the statutory limitation towards claim reporting? That's the first.
Yes, the period of limitation for you to file a claim will depend on the policy involved. Some are 30 days. There are some, like marine, that you have longer period. But what I would say to you is this. Please, the limitation period is lying right there in your policy document. And if you have an insurance broker, your insurance broker will let you know immediately. But one thing is good, and it should be taken as the rule of the thumb. Once a claim occurs, even when you have not known the full facts of that case, please report it, while you are waiting to get the full facts.
Thank you very much. This other one, 5 to 7 years.
Who said? No.
NICOM.
What NICOM said is completely different.
Is from statutory limitation, yes, right?
What NICOM said is totally different from the question now, what I've answered. NICOM was asked, how long would a reported and undocumented claim,
very correct,
be in their records?
Yeah.
So to make results for it. That's what he was asking, which is completely different from this question now.
Thank you. Please, I want to encourage us. We are wrapping this up soon, so please, we need your attention here. And the final question for you, Ma, will be, or is the period slated or stated in the SHIP or contract between the insured and insurer so as to address the problem of late claim notification, particularly for a long-term period of lateness? I don't get this. It's been addressed. Okay. So let me ask you this. Why do insurance companies shy away from prosecuting fraudsters?
It is not the job of insurance companies to prosecute fraudsters. They don't have power of prosecution.
Okay.
It is the police that will have the report, and then it is the police that will prosecute.
Thank you. So let me go to Mr. Kenneth now. Is there insurance fraud, Mr. Kenneth? Is there an Insurance Fraud Act?
Insurance Fraud Act. We have anti-money laundering policies.
You have what, sir?
Anti-money laundering.
Money laundering.
Yes, so
okay.
it's not easy. It's not simple for anybody to perpetrate
Insurance
act like that.
fraud. Okay.
Yes. Because we have examiners who are trained that go to companies to examine especially claims paid. Because you see, somebody said that companies report volumes of claims settled, but how spread are they? So we go into details to know, especially in life policies, to know whether these claims paid were not involved in money laundering.
Okay.
Yes.
All right.
So
but
it's
there
not
is
simple.
no particularly Insurance Fraud Act. There's nothing like it.
That anti-money laundering covers everything.
It covers everything.
Yes.
All right. Thank you for that response. This is an addendum to that question that you responded to. 24 hours if you have for registration, licenses, and all. Then this person is saying when all documents is sent correctly, and yet we don't get the license even after the 90 days elapses, what can NICOM do as a solution?
I don't understand.
Okay, so there's a document, all documents have been sent correctly, filled, and yet you don't get the license, right? After 90 days. Now, what can NICOM do to help out? Now, this is like a case of someone saying, okay, so I put in all my documents and I still don't have my license.
That was in the old.
So
order.
you're saying it cannot happen?
Yes, cannot happen.
Mrs. Ezeibe would like to respond.
Once you correctly fill your form on the
Just
platform,
yes.
your this thing, your license.
Automatically.
Yes.
We'll hold you by that. Mrs. Ezeibe, you want to?
Okay, I'll answer this way. Let's say for one reason or the other, because he qualified it, he said once correctly filed. But let's just say the question is, if after 90 days, after filing for my license, the person said, what can NICOM do? It is no longer NICOM that you should be asking, what can NICOM do? Because it is NICOM that was supposed to answer you within 90 days anyway. And the question is now saying 90 days has passed, and I have not heard from NICOM. So it should then be, what do I do? The Act has given you a right to appeal, that I have filed my papers, and correctly, because sometimes people will say, I have filed all my everything. To file everything is not the issue. It's the adequacy of what you have filed. So after that, after 90 days, you have a right to appeal to the minister. So that is what
that's a very good response from a legal practitioner like yourself. Now, this is the final one. To NICOM, what benefits does the health insurance company derive from 1% supervision fee when the sick one takes 20% of the 1% to settle their claims by NICOM?
Please.
All right. What benefits does the health? Okay, the healthy insurance company derive from 1% supervision fee when the sick one takes 20% of the 1% to settle their claims by NICOM.
Well, you see, I don't understand this type of question because you see, if you pay, NICOM is saying that the 1% you are paying is not even enough to carry out all operations, and you are asking,
Should we let Mr. Kenneth off the hook, ladies and gentlemen? We should let him off the hook, right? So we are letting you off the hook. But before we let all the panelists go, I want to bring up Mr. Odwayo Bameke. He wants to, Mr. Odwayo, please kindly come. He wants to clarify the issue of claims, documentation period, and how to account for it. You might want to get his microphone.
please, don't kill my brother. Eh? allow him to fulfill his time at NICOM and retire peacefully. Eh? When you ask him questions that has to do with what they do with your 1%, that is career threatening. Okay? Please allow him. Okay? Your 1% is safe with NICOM. All right? And don't be sick so that they won't use 20% to pay claims. Because then you are sick, you might become Niger. That is now history. But I just wanted to clarify an aspect because there's the lady that asked a question about claims notification and then tying it into what is the statutory limit for when cases, when you can lodge a case and all that. Now, when you look at your policy, you are expected to notify your claims immediately, okay? And some policies will allow you 30 days. Some will say 60 days, depending on what you have negotiated, okay? That is notification of claims. But the question that was asked was that if a claim was notified and is not documented, how long do you keep it in your books, okay? And that has to do with the accounting policies. When you are dealing with your claims reserves, your incurred but not reported claims. And that one, you have to talk to your auditor, and then the auditor will look at the provisions of the, is it IFRS 17 or 72 you are using now? Look at the provision of the IFRS, and then look at the provision of the NICOM guidelines and the law, you know, to determine at what point you remove those items from your books. So there are two separately, totally different issues. One is an accounting issue. One is a policy document issue.
Thank you.
Are you clear?
Okay. Okay, maybe you should meet Mr. Oduayo later so that for further clarity, so that we don't further stretch this. Distinguished guests, ladies and gentlemen, please let's jam our hands together for our panelists, Mr. Kenneth and Mrs. Ezeibe. I believe NICOM should pay you extra, ma, for the responses to those questions. Can we celebrate them better, ladies and gentlemen, as they take their leave? Please rise. They take their leave right now. Thank you so much for doing justice to that. I am happy for you, Mr. Kenneth. Now you can return to NICOM. I do not envy his position at all. Ladies and gentlemen, can we have the representative of Sanlam Insurance very quickly for your product presentation? Can we celebrate them with a round of applause, ladies and gentlemen? They are one of our important partners. You might want to take that mic.
Good afternoon, gentlemen and ladies. Permit me to stand on existing protocols, but I can't go on without giving kudos to the organizers of this event, Care First Consult. This is a very wonderful initiative. It shows that we are truly moving forward in the insurance industry, trying to ensure that we change the narrative and make customers understand what we really do. Today, I've been called here to give a quick and brief talk regarding what has been said. My conversation will be in 3 different dimensions. Most of them has been touched in the course of this event so far. But before I go on, I looked across the room and I see a lot of familiar faces, which tells me that more than 80% of the people sitting here are insurance practitioners. I can also infer from the questions asked the regulator that we are more insurance practitioners than consumers here. Notwithstanding, it's a good job that First Consult is doing. So my talk will really be to us, the insurance practitioner first, and then I'll round up by just having a quick chat with the consumers. Because what we do as individual organizations is what aggregates into what the consumers out there perceive us to be as an industry. So it is good that this kind of forum is holding so that we can continue to improve in our conduct and how we serve the customers. So, I will want to talk on insurance technicalities. We were all trained to see insurance as something that is very technical. Insurance isn't technical. We need to keep it simple so that the customers can understand what we're saying. We need to use languages that customers do understand rather than speak in our insurance term. I'll give an analogy. My son, a 12-year-old boy back then, asked me, "Daddy, what is insurance all about?" I tried to explain it to him, and he didn't understand me. That was my first line of thought. He did not understand me. But later, I said, no, I did not do a good job in breaking it down to him. Now, let's ask ourselves, those of us that are insurance practitioners here, can we say that our children, our loved ones, our wives, our husband, people that are close to us, understand what we do and they can explain it on our behalf without us being there? I don't think the answer will be in the affirmative. So let us start learning how to speak to not ourselves, but to the very laymen out there that do not understand our language. So for example, when we say policy, go and read your policy. What is policy to a non-insurance practitioner, to a consumer? The policy is nothing but the contracts of agreements. Let's learn to take it away from what we do understand by breaking it down. Insurance is nothing but putting a family together and saying, hey, we may have needs in the future, and undesirable events might happen in the future that we did not plan for, or what we planned for may happen and we will not have the resource to even meet the need. Can we then have a custodian, an external family member that will help us keep the fund, so that if any one of us need to access the fund is given to us equitably? That is what our job really is. That's what insurance is all about. And we must learn to continue to keep it simple so that everybody can understand us. Now, when we keep it simple, it's easy to communicate. That's the awareness part of it, and which is what we're doing now.
Conflict Resolution Committee. She is an African Arbitration Association member, Arbitral Women, and Nigerian Bar Association. She belongs to them. Ladies and gentlemen, presenting up on stage the principal partner, Josephine Akinwumi and Co. Mrs. Josephine Akinwumi. Can we jam our hands together? Ma, if you can wrap this up in 15 minutes, I'll be glad.
Thank you very much, everyone. I'm delighted to be here. I must say a big thank you to Mr. Wiggle and the team for putting this conference together. I came in quite early, and I must say that so far it's been time very well spent for me. I've had an amazing time with all the speakers. As I get along, I think I should apologize ahead. If you find me coughing a little bit, please forgive me. I've had a bit of cold, but I can assure you that it's not COVID. I got a negative test yesterday, so don't worry. Also, I have 10 minutes. I'm going to rush through my slides. But some of the speakers have actually set the tone and made things easy. For example, I started off by defining, after giving an overview of my session, I went into some definitions, which I might speak as I get along. So you can take my slide to the third one, which is the overview of my session. And that is arbitration as a mechanism for settling disputed claims. When I got that topic, I had an immediate reaction, and that was, why arbitration? Shouldn't it have been alternative dispute resolution as mechanism for resolving disputed claims? but it's been left as arbitration. So what I want to do to the audience this morning or this afternoon is to give you an insight of alternative dispute resolution, so you understand why I had a bit of concern regarding the topic restricting it to arbitration rather than alternative dispute resolution. And at the end of my presentation, you'll actually be able to make up your mind if you really want the parties to go ahead with arbitration or any other form of alternative dispute resolution. I'm sure that helps. So a quick overview. So we've said that insurance is meant to be the safety net for to protect the insured. But as we've seen with all the presentations, disputes are inevitable and they are bound to arise at the particular stage when parties want to get their claims. So I say it's a known fact that clauses in insurance policies are most oftentimes interpreted or read differently by the insurer than by the insured. And this results in claims being rejected and, of course, disputes arising. So the presentation will focus on the appropriate dispute resolution mechanism for disputed claim settlement. So let's go on to the sentence. So what's an insurance claim? I'm sure everyone in this hall can define that, so we can skip that. So dispute resolution mechanisms. The traditional dispute resolution mechanism that we all know is what? Litigation. Everybody, what immediately comes to mind when you're talking about dispute resolution is litigation. But however, as time went on with congestion in the courts and a combination of things, we began to hear of ADR, alternative dispute resolution. And for people who actually know how ADR started, they will tell you that it's been there from way back, even before we had the formal systems. From our villages, from our communities, ADR has always been there. And there's so many types of ADRs. I will go into details now, define ADR, but we're going to narrow down on 3 major types for the purpose of this conference. So what's ADR? Alternative dispute resolution. That's the procedure for settling disputes outside of the courts, outside litigation. So the main types, like I said, for the purpose of this conference, we're talking about negotiation, mediation, and then arbitration. So you now see my concerns when I saw the topic restricting it to arbitration as a means or mechanism of resolving disputed claims, which means there could be other forms of mechanisms under the ADR aside of arbitration. So even though you have arbitration in your programs as my topic, as a form of dispute resolution for insurance disputes, particularly claims, I want you to have in mind there's the possibility, aside of litigation, to have other forms of dispute resolutions. And what's the main attraction for ADR? Less costly and, of course, more expeditious. They are increasingly being utilized in disputes that otherwise result in litigation. And from listening to some of our speakers today, they had inferred or made references to some form of communication within the insurer, the insured, the brokers, indirectly talking about possibly negotiations and maybe, if escalated, mediation, and not even getting to the stage of arbitration at all. And I said one of the primary reasons parties may prefer ADR proceedings is that, unlike the adversarial litigation, ADR procedures are often collaborative. Parties are able to sort of reason together and determine how to take the particular dispute further. And it also allows the parties to understand each other's positions. What you find out is when parties are already so upset, I mean, they're not listening to each other. They can't hear each other anymore. They cannot even listen. So if you find them in such a situation, they probably go to court. If you get to court, I always say to people, when you go to court, what you're saying to the judges in court is, It doesn't matter what side of the bed you've woken up on. Just decide this matter for me. I mean, if you've had a big quarrel with your wife or with your husband, and you're so mad and upset that morning, it doesn't matter. Just decide this dispute for me. But the moment you decide that you want your dispute resolved by any of the forms of ADR, what you're saying is that I have the answer in my hands. I mean, I can actually decide how I want to run with this dispute. So those are the points and advantages. I've told you there could be many forms, but we're narrowing down excuse me, to 3: negotiation, mediation, and then we come down to arbitration, which is the topic that I've been given for today. So negotiation, I'm sure we all know that definition. We all at different stages have been involved in some form of negotiation or the other. So it may be defined as any form of direct or indirect communication through which parties who have conflicting interests discuss the form of any action which they might take together to manage and ultimately resolve the dispute between them. Emphasis is on between them. At this point, at the stage of negotiation, you don't need a third party. It's just between the parties themselves. For example, the insurer and the insured. The process or the time when you say, "What? Let's talk about this. I think we can actually resolve this without bringing anyone in." That is the essence of litigation. Nobody is coming in to decide. Nobody is coming in to facilitate settlement. It is just between the parties. And you find that even before you get to the stage of when parties have disputes with respect to claims, you possibly have discussions at the early stage. It's usually of a great advantage to be able to discuss this. By the way, I should have mentioned it. After I got invited to speak at the conference, interestingly, I got appointed as a mediator over an insurance dispute. And I said, were there monitoring spirits? Were people just waiting for me to, be at this conference before I got my first appointment as a mediator in an insurance dispute? That is ongoing, and I believe that it's going to go well and possibly end well with the cooperation of the parties. So unlike arbitration and mediation, the outcome of negotiation is reached by parties together without resorting to a neutral third party. So there's a lot to be done with insurance companies and also with the consumers. A lot can be tidied up at the very beginning, even without advancing to mediation or arbitration. And I said sometimes, you can go on to the second slide, please. Yes. Sometimes insurance companies prefer negotiation to solve their disputes in order to maintain their customers and to preserve their future relationship with the insured. It's the best way, if at all possible. And that has to be noted. And I said the insurance company uses different ways of communication to invite the insured either to negotiate with them. It can be by a phone call, it can be by an email, by just any way you think that this can be resolved. So that's enough for negotiation. Let's go on. What's mediation? And I think one of my favorite definitions when it comes to mediation is that by CEDA, the Center for Effective Dispute Resolution UK. And they simply define mediation as a flexible process conducted confidentially in which a neutral person, that's a third party, actively assists parties in working towards a negotiated agreement of a dispute or difference, with the parties in ultimate control of the decision to settle and the terms of resolution. I mean, it's a simple definition but packed full. A confidential process where you have a third party, and all the third party does is to facilitate settlement amongst the parties. So the final decision on whether the parties settle or not still rests with the parties. So the difference between negotiation and mediation is the fact that mediation has a neutral third party. But with negotiation, it's just the parties on their own. And I think I really want you to listen, because sometimes there's a mix-up between mediation and arbitration. Some people use them interchangeably, but they are completely different. So mediation, you have a session where a third party comes in and tries to facilitate settlement between parties. So mediation is collaborative, and the mediator helps the parties reach a mutually acceptable agreement. So all he does is to facilitate settlement. So with respect to mediation, insurance companies tend to use mediations to solve dispute which arises between the insured and the third party. Sometimes, even when a third party is involved, you can have that setting and that goes on. And as much as most companies recognize arbitration in their policy as a means of dispute settlement, they sometimes start with mediation. So you can have the multi-tiered agreement where you first of all give mediation an option. If mediation doesn't work, you can then decide that you want to go ahead to arbitration. So now, arbitration. I mean, different schools of thoughts on arbitration. Some people will say, well, arbitration is not really an ADR mechanism, it's a standalone. Other people will choose to define arbitration as being part of the ADR mechanism. So I will define arbitration as has been defined in the Halsbury's Law of England 4th edition. And it says arbitration, it refers to arbitration as a dispute or difference between not less than two persons for determination, after hearing both sides in a judicial manner by a person or persons other than a court of competent jurisdiction. The simplest way when I teach this topic on arbitration is to let parties know, or to let the participants know, that arbitration is, as far as I'm concerned, litigation in a private setting, because you still have an arbitrator who decides the matter for the parties. So where the judge publishes or writes a judgment, an arbitrator publishes an award, which is like a judgment. So that's the simplest way to understand what arbitration is. And I think that expresses the bit of concern I had when my topic says arbitration as a mechanism for resolving disputed claims. In mediation, the mediator is not deciding. The mediator is only encouraging the parties to hear each other. And upon hearing each other, parties are able to decide if actually they want to resolve their disputes based on specific terms. And once they have agreed on those terms, the parties will sign, and those terms, almost all the time, will be entered as a consent judgment of the court. And that takes it on. So mediation, no one is deciding. But in arbitration, you have an arbitrator who actually determines the matter, decides who wins and who has lost. And with arbitration as well, you can have one or more arbitrators. You can be a panel of one, or you can have 3 or more. So those are the major ones we're talking about. Advantages of ADR, we've mentioned some of them. You know, it's fast, less costly. I always have question mark when I talk about it being less costly, because some people who are into arbitration will never agree with you on that. So people have a chance to tell their story. That's the beauty of mediation. People have a chance to tell their story, and that helps. That really helps. It is more flexible and responsive to the individual needs of the people involved. It is more informal. And then the parties involved in the process create greater commitment to results, so that compliance is very likely. If you've had an input in what you're discussing, and if you've agreed to specific terms, it's easier to comply. It's easier to comply with what you've agreed on than what has been put or placed upon you. For example, if I had to sit as an arbitrator over a matter, I mean, I 100% try to do it so well because the person I always have in mind at all times will be the losing party. Because what that party has in mind at the time will be how to challenge the award. So I have to be, excuse me, I have to be extra careful. So it's really, really important. So those are some of the benefits of ADR. So now narrowing down to my topic, so it won't be like I didn't, really go, I wasn't really specific. Arbitration as a mechanism for disputed claims. First, I think the last gentleman who introduced the product basically took the words out of my mouth and explained that the policy is simply a contract between the insurer and the insured. That's clear. And once that contract has makes reference to the fact that if any dispute arises between the parties, it has to go to arbitration, then there's nothing anybody can do. That dispute at that point, definitely we have to go ahead to arbitration. So the insurance relationship is a contract, and when the parties agree and sign an insurance policy which contains an arbitration clause, it is presumed that they have consented to be bound to settle their dispute by arbitration. It wouldn't matter if the prints of the policy were written, in the tiniest way. As long as you had them written there, as long as you signed, as long as stated clearly that it will go to arbitration, then no option. It goes straight to arbitration. So let's go. I'm trying to move fast. I had just 10 minutes. And I put a few things to note. I said before deciding on which dispute mechanism to use, parties must adhere to the policy which the insurance company issues and, of course, signed by them. The moment you've signed, you have to comply. Please, yes. I said in terms of subject matter, based on what can really go to arbitration, it will be different. Some policies might say all differences. Some policies might refer to some differences with respect to particular claim.
Good afternoon, ladies and gentlemen. Standing on existing protocol, these are industry greats that I'm privileged to be in front of them to present today. We've built a solution around auto insurance, and I'll just give you a brief story why I'm inspired to build this product. Sometimes in 1997, my dad got into a car crash, and because of that, myself and my siblings couldn't go to school. I was in SS1 at the time. We couldn't go for the second term. And in my conversation with my dad, I was like, I heard my economics teacher tell me there's something called comprehensive auto insurance. Then he laughed and he told me it's something for the big men. And I was like, what do you mean it's something for the big men? He said when he gets his salary at the end of the month, after paying you and your siblings tuition fee, after paying for house rent, after paying for upkeep of the house and all of that, the leftover is not for comprehensive auto insurance. I was like, okay, so I think there has to be something that somebody needs to do to make this not a product for the rich. Then, of course, I joined the insurance industry when I graduated from school, and I've been in the industry for upwards of 15 years. And sometimes in 2017, I decided that it was actually time for me to see what I can do about comprehensive auto insurance. So I took a study leave to New York 2017 up until 2018 to learn how to use technology to distribute motor insurance. Now, so while I was in New York, I learned that if you want to build any technological innovation, it has to be based on data. So when I got back, we really had to break down and drill down on data. Now, regulatory data shows us that upward of 2 million vehicles have comprehensive auto insurance or have any form of insurance. And licensing office told us that over 12 million vehicles are registered. So it means about 10 million vehicle owners can't be bothered about auto insurance, right? So then also dig down into data, right? 98% of claims reported annually crystallize while driving on the road, right? Less than 1% crystallize while parked at home, actually, which means something actually works for the people, right? Most of us car owners invest in security, estate security, house security, and all of that. And because of that, probably that's what has driven claims to less than or equal to 1%. Same applies to our office space. So essentially it means if 98% of claims that crystallize or are reported crystallize while driving on the road, it means as a car owner, I should be particular about comprehensive auto insurance while I'm driving. So we essentially have now built a solution, a mobile app that helps you buy comprehensive auto insurance while you're driving on the road. While I was sitting down here, a customer of ours sent me a screenshot of 6 hours drive on his PayU app, and he spent 461 naira. I mean, it was like, oh, I'm so happy about these and all of that. I mean, all praises and how affordable. And this is somebody who, up until now, even used to think his third-party insurance is original, right? Until I ran it through NID database for him sometimes last month, and I told him, hey, what you have as original third party is even fake, right? So that essentially is the solution we've built. I won't have all of the time to go through our slide. That is the solution we've built, and we're so happy and glad that Mr. Goose is one of our customer who uses our solution and always gives good feedback and good review about our solution. So that essentially is something we've built. I know people listening in have thousands of questions. We went live August of this year. August up to date, we've been able to pay 2 claims, right? And our claims come with no argument because you get involved in a claim. We send you the picture of, that you logged on the app, and we send you the pre-lost video before you turn on insurance on the app. So there's no argument, right? The customer sees the 2 videos and exactly we are paying for what got damaged. So it's not somebody putting in what is not available there, and we have to start dispatching loss adjuster and all of that. So that essentially is what we've built, and it's a regulatory approved product. You can essentially go to Google Play Store to experience freedom on corporate insurance. Thank you very much.
Thank you very much, PayU. I don't know about you, but I'm essentially very proud of people who've had their journey so far and didn't relent, but rather created solutions to solving some of these problems that they personally have gone through. For all the amazing products and, of course, companies that have showcased and presented their products today, please can we do a proper applause to celebrate them, ladies and gentlemen? We'll have the closing remarks right now. I am sure the aroma is everywhere in the hall. We're getting to that point in time where we'll dine and wine. I can see some of that on our table. But I'd like to welcome up on stage Mr. Daniel Goes Wiggle. Can we jam our hands together, ladies and gentlemen? Let's keep clapping. Come on, let's keep clapping. This is the son of the principal consultant, CareFirst Consult. He'll do the closing remarks, and we'll have award presentation, and we'll move to our lunch and networking. Very important.
Good afternoon, everyone. Firstly, thank you all for staying until the very end, despite our late start. So on behalf of CareFirst Consult, the entire sponsoring organization, and our special guests, and as I like to call them, our fraternity of insurance, Thank you all for gracing us with your presence today. Our deep appreciation goes to the panel for their excellent coverage on rebuilding trust in the insurance industry. We extend our sincere thanks to all speakers and presenters. I believe we were all intrigued by the words you had to share today. I personally took some notes that I'm going to love to review later on. We thank all the sponsors for their guidance in setting up this conference. We truly appreciate your support. As you all know, an event like this doesn't just happen overnight. The wheels were set in motion months ago. So all the support, all the guidance that you've given us behind the scenes and today, we really, truly appreciate it. So on that note, we at CareFirst Consult are most grateful to all the attendees today. Thank you for being with us this afternoon. It's been a great pleasure, and we truly hope to meet you sometime soon. We hope you have a good day and have a safe journey on your way back.
And now, ladies and gentlemen, for the first edition of Claims Advocacy Conference, we have awards to give to all our speakers today. If you ask me, the conference chair, is the chair of the conference, so yeah, as a conference chair, yes. So we would like to have the following people up on stage right now very quickly. Can I have some music on the background for this so that we know that we are... Thank you. So can I have Mr. Gus Wiggle on stage, please? Mr. Gus Wiggle, can I have you on stage? Please, can we jam our hands together, ladies and gentlemen? Mrs. Anema Ekong, I hope I got that right. Can I have you on stage? Mrs. Ekong, can I have you on stage? Mr. Odwayo Bameke, can I have you on stage? Can we clap, ladies and gentlemen? Let's keep clapping. So the first award will go to the chairperson, Agricultural and Allied Group, Lagos Chamber of Commerce and Industry, Mrs. Edowong Akpabio. She's no longer here. So we skip. Can we have someone take it? Can we? Yes, Raymond can. Please, a round of applause, ladies and gentlemen. Can we have the plaque? Is ready. Is ready. It's just there. Mr. Raymond, kindly come up on stage. Mr. Raymond should be in the middle for pictures. Yes, yes. He's taking this award on behalf of Mrs. Edomong Akpabio, who spoke about the consumer perspective. Thank you. Please be on standby. We'll take everybody together at once. Next is the Executive Director, Technical and Operational Services, Leadway Assurance Company Limited, Ms. Adetola Adegbaye. A round of applause, ladies and gentlemen. She gave a technical presentation, indeed very technical today, on industry perspective, and we want to thank you for serving well and representing Leadway Assurance. Yes. Congratulations. And moving on very, very fast, ladies and gentlemen, we'll have Mr. Kenneth, the NICOM representative. A round of applause, ladies and gentlemen. And he must come up on stage with a smile on his face. He must come up on stage with a smile on his face. Yes. Thank you so much. Nikon must be glad to have you. Okay. Please be on standby. We'll take all the awardees together at once. Moving on, we'd like to have on stage the next awardee, the Managing Director and CEO, Crystal Trust Insurance Brokers, Mrs. Ekeoma Ezeibe. Can we do a proper applause? Ladies and gentlemen, congratulations. You have done so well. I am still insisting, Nikon must pay you extra. Yes. Congratulations, and we celebrate you. Thank you very much. And now, not the least, but the last on this list, the principal partner, Josephine Akinwumi and Co. Mrs. Josephine Akinwumi. A round of applause, ladies and gentlemen. Yes, please come. Congratulations. Congratulations. All right, thank you very much. And of course, now we left the biggest one for the last. Ladies and gentlemen, he has been instrumental in ensuring that this event came as a success, as we can see all around. The former GGM, Risk Management and Insurance NMPC, Mr. Odwayo Bameke. A round of applause, ladies and gentlemen. Conference chair. Conference chair. Thank you. Can I have Mr. Daniel Goswiggle up on stage? All the awardees, can we have you up on stage? Yes, and President CIA, it's good to see you again, sir. Please, we'll take pictures together. Yes, it's better. It's better down there. Please come out with your plaques. Come out with your plaques. Come out with your plaques. Let's do this picture once and for all. Distinguished participants, guests, companies, partners, brands, risk takers, and of course, risk managers, insurance officers. Ladies and gentlemen, we have come to the end of the maiden edition of the Claims Advocacy Conference that happened this year, 2022, and it was themed Catalyzing Insurance Through Better Claims Experience. I believe we're all learned, and of course, we've all gained one extra contact or the other. Thank you so much for being a part of this. On behalf of CareFirst Consult, we thank you and all their partners. We wish you very well. God bless you. Keep blooming and growing. Ayodele Ayokane is my name. AY Nigeria. Till the next event, I'll see you. God bless you.